will send you out a no-obligation information kit absolutely free. 866-928-3310. The CFRN Emini Futures Cast is now on Stitcher. Listen to us on your iPhone, Android phones, BlackBerry, and WebOS phones. Stitcher is smart radio for your phone. Find it in your app store or at Stitcher.com. Stitcher Smart Radio, the smarter way to listen to radio.
Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Today's broadcast is brought to you by Audible. Get a free audiobook download at www.audibletrial.com/CFRN. Over 85,000 titles. Choose from mystery, romance, religion, science, technology, business, New York Times bestsellers, even children's books. You name it, Audible has it. With 85,000 titles to choose from, you're sure to find the perfect audiobook for yourself or to give as a gift, and it's absolutely free. Just point your browser to audibletrial.com/CFRN. That's audibletrial.com/CFRN. Become a part of the audiobook revolution by downloading your free audiobook today. audibletrial.com/CFRN.
Hey, trader, want to get rich? Well, good luck with that. If, on the other hand, you actually want to learn how to trade, the place to be is www.cfrn.net. Tune in Monday through Friday, 9 a.m. Eastern for our daily devotional, and then spend the next 3 hours learning how it's done from professional traders who actually trade for a living. That's www.cfrn.net. Every trading day from 9 a.m. to 1 p.m. Eastern. CFRN, a community of believers who trade for a living.
Good afternoon, traders, and welcome back to the CFRN Emini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things Emini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro, and even T-bills. Joining us today from our studios in Boston, Mr. Michael Bork. From our trading desk in Chicago, Mr. Burton Schlichter. And from our studios in Las Vegas, Nevada, Mr. David Williams. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Monday, first day of September 2015. Now, if I were still a kid, that would be a very long time ago, today would be the first day back in school. That's how it worked. You got 3 months off for the summer. June, July, August. First day of September, back to school. It was easy to keep track of. It's a very complicated world we live in these days, and then we wonder why our kids can't keep their pants up. Or maybe that's a separate issue. Anyway, welcome to the show. If you're here for the first time, a very special welcome. And if you're returning, oh man, you are a glutton for punishment, aren't you? We're in our second decade of broadcast. Think about that. That's a long time. Broadcasting live, daily, answering questions. But that's just the side you can see. The side you don't see are the untold hours count teaching and training and mentoring those who would like to learn how to trade for a living. I'm constantly amazed at the number of people I talk to on a daily basis. Forget virtual, on a daily basis, who have been attempting to become consistently profitable in the markets for weeks? No. Months? Some of them. Years? Lots of them. I hear 3 years, 5 years, 7 years more. I hear 3,000, 5,000. I hear 100,000 more. Chasing one thing. One thing. How to be a trader and not get stopped out. And then I have to be the one to deliver the heartbreaking news that all the time and all the treasure was spent looking for a black cat in the dark that doesn't even exist. You can't find what isn't there. The best trader on his best day will be profitable 7 out of 10 trades. That's a true story. That's the truth about trading. That's a fact. That's evidence you could take into a court of law and prove your case with. But yet, somehow, in our little lizard brains, and mine included, I got the biggest lizard brain in the room, we fall under the spell of the pitch man, of the huckster, who tells us if we drop on by www.thisspecialpartofhell.com for just $99, all my stop out worries can be wiped away with an indicator, an oscillator, an incantation, or some magic number. Wow. It's a brutal road on the way to Wall Street. If you've been following the series The Walking Dead, you know how hard it's been on them getting to Washington, D.C., and I don't want to do any spoiler alerts for those that are watching on Netflix, but this trip from Houston to Washington, D.C. takes a real awkward turn in Georgia, so be prepared for that. But not unlike the journey that we as traders take as we go from not knowing nothing about trading to being a consistently profitable trader. I mean, the internet literally is littered with the walking dead. And, you know, as soon as you fight one off and stab him in the head and put him down, here come 4 more out of the woods. Where do they come from? Just do a Google search. Man, they multiply on a daily basis like rabbits. Who are you going to trust? You know what? It is easier to learn how to trade than it is to figure out who you can trust. And that's a true story. They come, they rape, pillage, and disappear into the night. Only to surface under a new name. But I'm telling you things you already know. That's not why you're here. You're here today because you understand why we're still around for our 2nd decade. Because this is the one place where you can come, and you may not hear, or you may not like everything you hear, but whatever you do hear, you're going to hear the truth. Today in our live trading room, it was tough. Yesterday, 1 shot, 1 kill. 1 trade, 5 minutes, done for the day. We keep trading the whole 2 hours, real money, real time, real people. But today, we had to work for it. But you know what? That's the truth about trading. No one wants to tell you that's the truth about trading, because once you find out it's work, it's not magic, you might not want to do it. And you might not send that $79.95, which is going to wipe away all your trading worries. So, how's that for a happy Tuesday? Happy Tuesday. No, seriously. I hope it's a great Tuesday wherever you are. And if I'm the first person who's said Happy Tuesday to you, well, golly gee, let me say it again. Happy Tuesday. Glad to have you with us. Let's take a quick look at the numbers. The S&P 500 is down 41.5 points. Now that's cash market. I'm going to say it again. The S&P 500 is down 41.5 points. Let me put that in perspective. That's 2%. The entire market capitalization of the S&P 500 down 2%. In case you don't know, that's a lot for one day. The Dow Jones Industrial Average cash market is down 350 points. That's over 2%. Let's roll down to the Russell and the NASDAQ. NASDAQ down 84 points, almost 2%, and the Russell down 18 points, which is down 1.5%. Big numbers. Yesterday we saw some incredible volatility in crude oil. On our Concierge Trade Alerts, the first trigger was to the downside, and that made $1,000 per contract available for those who were able to hang in there. Most people aren't going to hang in to the end. In fact, if you're able to hang in to the very end and catch the last tick, I want to come to your class. I want to visit your seminar, listen to your radio show, or read your articles, because you've got something I don't have. Now, after the incredible $1,000 drop, it turned right around, triggered on the long side of our Concierge Alerts, and put in a $3,000 rally plus. Now that's per contract. That's not the 10 contract traders numbers or the 20 contract trader. That's the one contract traders numbers. Imagine being in on that run as a 10 contract trader. Make your head spin, huh? So what's oil done today? It's down almost $4. To be exact, it's down $3.75, which is a 7.5% drop. Now, 10% is considered a correction. All right, well, in one day, we've taken back an awful lot of what we put up yesterday. We're still trading at 45.45. Now, remember, Mexico, the word we got yesterday, the news was that they have hedged their entire production for 2016 at $49 a barrel. Gold today is up about 0.5%, up $6.90. In Asian markets, the Nikkei down 724, Shanghai down 40. And by the way, on the Nikkei, that's almost 4%. The Shanghai is down 40 points, and the Hang Seng is down 485 points, which is 2.25%. So, who are we going to blame it on? Well, it looks like, as I just scan the headlines, that everybody's pointing the finger at China. Remember, it was Greece for so long, and now it's China. What are you going to do? Well, you can just trade what's in front of you and not really worry about it too much. I mean, many of us lived through the great market crash of our lifetime. Some of us actually lived through the Black Monday. Mike Reed, one of our co-hosts, he was trading that day. Many of us tuned into this radio station lived through the 666 S&P 500 low and the market meltdown of recent years. And so, what's this all about here? Is it part of a rounding top? Is it part of a yearly top? Do we have some downside ahead of us? Well, later in the show, we'll pull up a yearly chart, or not a yearly, but we'll pull up a big picture chart, as big as we can, of the S&P with the platform I'm using, and we'll see what a 38% retracement number looks like, and we'll see what a 50% looks like. We'll see what a 62% looks like. Because, see, those types of corrections, or pullbacks, if you will, are normal and healthy, and they're just part of what markets do. And so, is the sky really falling? Well, maybe chunks and pieces. You ever been in an old building where, you know, the entire ceiling doesn't cave in, but every now and then a random tile up there? You know, one of those tiles from the 70s or 60s, the ones with the asbestos, yeah, will fall and bounce off your head. Yeah, maybe there's a little bit of that going on. But will we survive? Will we be okay? Do we have a new president on the way? Is there going to be much volatility afoot from now until then? It kind of looks like it, doesn't it? So we'll look back at some point when the markets do get quiet, whenever that is, on quiet days, and we'll go, man, where was that volatility? Where was I when all that volatility was happening? Because the market's quiet today. And it's more difficult to take your points out of a truly quiet market, or a almost silent market, than it is one that's offering these kinds of moves. Now, we're still looking at last week's weekly trading zones. I haven't broke out this week's yet. Probably do that tomorrow here on the radio show. Our CFRN partners, of course, get the weekly trading zones every Monday morning before the market opens. Okay, so they're able to get a little jump on things. And once we issue those weekly trading zones for the week, we don't change them, massage them, manipulate them. We don't do anything with them. They stand. And this is how it played out, you know, last week. That was the Sunday night Globex Open, not this past Sunday, but the Sunday before. We gapped lower on the open, as we did this past Sunday night. And we hit our lowest weekly trading zone last week to the tick, which was 1831. And then just some big swings going zone to zone, back to the zone, and down to the zone, and up to the zone, and down and back. Nothing changed except the size of the swings. And even this week, what has changed is simply the size between the zones. You know, what do we got? A swing low today on this session of 1914.50. Okay. What does that mean in the grand scheme of things compared to where we are for our weekly trading zones for this week? Well, I'll tell you. Sitting here at actually we're now at 1927. We have one zone below on the S&P. Now, it's a pretty good ways down there, I got to tell you. But it's down there, and the way this market's going, it's possible we could see it. I'll reveal it all tomorrow, Thursday at the latest here on the radio show, but if you're a partner, you've already got it. You also know what zone is overhead, and if the market starts to put in a little bit of a rally, you'll know where we're headed. Okay? All right. Here's what we're going to do. We're going to go to Michael for a recap of everything that happened in the live trading room today. Good, the bad, the difficult, stuff we missed, just, you know, truth about trading. First, we'll do that. When he's done, I'll be back with our good word for the day. After that, I'll go over a couple of the Concierge Trade Alerts from last night. Then we'll talk to David from pagetrader.com for his forecast from the edge. And then, today being Tuesday, my co-host will be my good friend Jonathan Rarick from right here in Phoenix, Arizona. And today's topics are movies, War Room, and Risen. We'll also talk about the different types of trader, algo, market makers, and retail. And we'll even talk a little political about Dr. Carson moving up in the polls. So that's it. That's our Tuesday show for you. Let's get it rolling. Michael, are you ready?
I am ready.
All right, brother. It's all yours.
Indeed. All right. Put that over there. I'll grab that. And that. And that. There we go. Okay.
And I can see your screen, so I'll hit mute on my end.
All right. Here we go. Good afternoon, everyone. Today is Monday, the first day of September 2015. Before I get into the live trading room, let me just show you how to take the free trial. You go to CFRN.net, and in the right-hand column here, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. All right, you must click on that confirmation link. If you don't click the confirmation link, you're not going to get a free trial, so you got to make sure you do that. All right, let me slide this over here for a second. Yeah, okay, that's what I thought. All right, and slide it back over here. Now to view our live trading room results, you click right here, view live trading room results. Then right up here to view our spreadsheet, click there. This is available to everyone now. We don't need to email it out anymore. Everyone can have the spreadsheet in front of them, should they choose to. All right, we had kind of a rough day today. Our first bunch of trades, our first trade was a loss, the second trade was a small win, then we had another loss, and another loss. And we had to recover from that. It took us a while. We ended up with +4 on soybeans, +7 on crude, +2 on gold, +5 on the ES, and -8 on the euro. Okay? It took us 105 minutes and 22 trades today to get to $102.50 a contract. And that's it. So on the month, we're up $102.50 a contract, gross. Last month, gross profit was $7,200 a contract. Last month started out similar to this month, and we ended up averaging $342 a day last month. So far in the year, we are up $41,837.50 a contract. That is over 162 trading days, averaging $258 a day, gross. Okay. If you're adding one contract per month, you're up to 9 contracts starting this month. So as we go out through the rest of the year here, it's going to multiply. These numbers are going to go up significantly. If you look at last year's, we're off a little bit from last year, I think, right now. In our live trading room results, we're up 195,000 after 8 contracts, 8 full months. If you did the add one contract, and this year 191,000. So we're off just a little bit, but the end of the year is on the way. All right. Yeah, last month I think it was November was our best month of the year. Okay. Again, to take a free trial with us, you just have to go here to our homepage, CFRN.net, put in your name, email, click register for a free trial, and then click the confirmation link to get sent to you. All right, simple as that. Now, let's go over the trades. We decided to trade the ES rather than the Russell today because the Russell was just too jumpy this morning. All right, so I'm going to start out with gold, and then we'll get over to those other ones. All right, our first trade right here on gold was a loss, -8 ticks. Did we miss any before that? One right here. We missed this one. But our first trade here on gold was a loss, -8 ticks. Then we got really flat. Didn't really have anything we could do. Got a short trade over here. We took 4 ticks profit on that, putting us at -4. Missed a couple of trades in here. Got another trade right here. 4 more ticks. Got us back to break even. And over here we almost stopped out on this one, but we ended up getting 2 ticks profit on it. And just as we were wrapping up this morning, there was a short trade here and a short trade here and a short trade here. And most recently, a long trade right here. And that was it. So we missed 4 trades during the break. Okay, but we were +2 ticks on gold. +2 on gold. And the ES was just, just look at it the way it's going back and forth across the BBC. It's like it's good. No respect for the BBC at all today. Alright, still going. Okay, here we go. Our first trade on the ES was also a loss. We stopped out on the ES right there. And then we got 8 ticks back right over here. So we were break even at that point. Missed a long trade right here that went right up into the zone. That was on some news. You can see when the market gets really choppy like that, and it all does all this within a minute. It's usually based on some sort of news event. And It's Tuesday. Did I say it was Monday? I might have. It's Tuesday. Thank you. Yes, I did think the TF was insane today. And Gene, what did you say? Thank you. And all right. So today was very difficult, though, Eugene, for me to make money. We stopped out again here. We're at -8 right here. No, it's charts now. It's charts now. I can see, everybody else can see it, Wayne. We stopped out right in here for -8. So we were back to -8 at that point. Break even on that one. Missed that one. Missed that one. Missed that one. And we got one tick there, putting us at -7. Oh wait, this must be the one tick. Sorry, that was a break even. This is a one tick, putting us at -7. Then right here we picked up 8 ticks, putting us at +1, and had a break even there, and 4 tick profit right there, putting us at +5. This is where we got our goal for the day on this trade right here at 11:14. It took us forever today. Let's see. During the break, there was a shorting opportunity right here, if you wanted it. And the long right there, that would have been a break even. Another short right here that worked out okay. And another short over here that worked out okay. One more right in there, I suppose. Well, I just keep scrolling. There was more. There was one here. A long right in there. And a short there and there. Okay. That was pretty much it on the ES today. We ended with, what did we end up with? +5 ticks on the ES. Crude oil. Crude was pretty volatile today. Here, let me back it out a little bit. You can see. And he was jumping all over the place. Again, our first trade of the day on crude was a losing trade. Stopped us out and then went up where we thought it was going to go. We had to work our way out of that. We got 1 tick profit on this one. So this we're -8. Over here we're -7. I missed that trade right there. From -7 we got 4 ticks profit, putting us at -3. Then we got 6 ticks profit, putting us at +3. Missed a trade there, there. And I took a trade right here with 2 ticks profit, putting us at +5, and another one right there with 2 ticks profit, putting us at +7. And I think that is where we stopped. It is where we stopped the trading on the crude. But look at all the volatility it had in here. Now what you need to look for is look down here in the slingshot and see where the green line is pulled away from the cycle. Okay? In all of those situations, there's almost always a trade setup happening up on price. Okay? That's what when I go back and I do a recap like this, that's what I'm looking at. Okay? Yeah, the crude had some really good volatility today when the European markets closed. All right, we ended with +7 on the crude. On the soybeans, we just took the one trade right here. We had +4 ticks on the soybeans. We were looking for it to close down below this level all morning. It finally did it over here at 11:37. Okay. That was it on the soybeans. On the euro, we just had, we had this trade here, and we had one more break-even trade that we took on the euro somewhere. Was it earlier? Yeah, there it is right there. Okay, we had a break-even trade for our first trade, and then we stopped out on this one. This one stopped us out to the tick right here. Stopped us out to the tick and then moved on down. And that was it. That's all we had today. All right. So let's bring this back up. If you have not taken a free trial with us, go to our homepage at CFRN.net. In the right-hand column, put in your name, put in your email, click on register for a free trial. When you do that, you'll be sent a confirmation link. You must click on the confirmation link, okay? you must click on the confirmation link. If you don't click the confirmation link, you won't be sent a free trial. To see our spreadsheet, you click there, and that will bring it up, and then we'll go down to the bottom, and we'll go over our results again for today. Quickly scrolling. This is the fastest way to do this. There we go. Oh, the year in there. There we go. Today we made 4 ticks profit in soybeans, 7 in crude, 2 in gold, 5 in the ES, and we lost 8 on the euro. We ended up plus 102.5. It took us 105 minutes and 22 trades to get there. Last month we ended plus 7,200 after 21 trading days, averaging $342 a day. Last month started similarly to this one. All right. All right, and that's it. With that, I will stop the recording. We can head back on out to Phoenix. Fabulous. Phoenix, Arizona. Phoenix, are you there?
Yeah.
Phoenix.
Yeah.
Oh, okay.
All right.
All right.
So recap of the recap.
Recap of the recap. It took 105 minutes and 23 trades today to get to 102.50.
And how many rollover trades did you have at your disposal?
Oh gosh, I don't know. Just in the trades last month that I had 6 days last month where I made my goal on the first trade. So just between those 6 trades, there were 54 trades, 54 rollovers. So I had lots and lots.
That's awesome.
Yeah.
Alright, I'm going to take the charts here in just a second. Guys, I did a candid camera style interview yesterday with one of our partners, Dan. Dan has just completed his, as of today, he was one and done today. Dan is the same Dan who created our daily performance tracker app that is available to partners in the members area of the website. Now I'm going to show you how you can get access to this recording. I'm going to put a link in the chat box that will allow you to right there, that particular link, that will take you to the iTunes page. You'll be able to subscribe. When something is put in iTunes, it takes 24 hours for the general public to have access to it. However, once you subscribe to our channel on iTunes and Android, okay, you can go to the Android Play Store, their podcast thing, just type in Emini and we pop right to the top. Subscribe to that and you'll always have the most recent episode that I've uploaded. I don't get every episode uploaded to the iTunes channel. It's a little bit of a special place, and so the interview with Dan yesterday really deserved to be in the special place. It started out as a mentoring session because Dan was at the 9-day mark. He had his 9 consecutive days of making $100, 10 trades or less, and this has been a journey. He came to us with no trading experience whatsoever. Really bright guy, and during the conversation I said, what might you have done differently that could have shortened your journey? And his answer was, well, I could have listened to you. Every time we had a mentoring session, and he goes, after a while I started, and you'll see, because he shows his journey. He shows the different runs he made at 10, and then he would have a rough day, and we would have a session, and then he would have another run, and we would have a session. So if you are still searching for consistent profitability, and you want to hear what it's like from someone who is actually doing the deal, We talk about following the rules. We talk about fibbing and fudging. And we had already been talking for 20 minutes when I clicked on the recorder. And I said, and then we talked for another 20 minutes. And then I said, you know, Dan, I was going to tell you this afterwards, but someone's journey and all that they've gone through. And you know what? This is a guy with a day job. Okay? He doesn't get to leisurely sit around and stare all day. In fact, I dare say, and you'll hear him say something to this effect, that might have been a great disadvantage to him. In fact, you guys have heard me talk about negative screen time. You're going to hear from Dan's lips his talk about negative screen time and what it really is. Okay? Being plastered to these screens all day, you think that's going to give you success? No. What Mark Douglas said in his interview a couple weeks ago about analysis being the smallest part of the equation. Listen to what Dan. Now Dan hasn't even listened to the full Mark Douglas interview from a couple weeks ago because I think I mentioned he has a day job he has to go to every day. So he had to get up early, get his head in the game. Wake up, get alert, get your head in the game, sit down and trade. Now, he has carefully documented every trade he's taken since he set foot in the simulator is going to be made available to you. Today was day number 10. Now, we discussed this on the video yesterday. You'll hear it. He was at day 9. And, of course, a little tension coming into day 10. I said, how many rollover trades and what is your rollover percentage? Well, obviously he could tell me to the tick and to the penny because he created the daily performance tracker. And I said, okay, well then it's already a done deal. And he says, well, how so? I said, well, you go in tomorrow looking to make your $100 per contract in 10 trades or less, and you simply can't let yourself dip below what you have in your rollover. You can't go negative. That's all. Because he said, well, I was thinking about maybe I just, would just let it slide tomorrow and let my rollover count. And I said, no. You go in and you do your job, which is to make $100. And he did it. He went in today, and he even sent me an email of the trade, and I've got it right here. I'm going to show it to you as soon as I find it. Let's see. It'll take me a moment longer than I thought, but I'll find it because I read it this morning.
Yeah, I still have the charts, by the way.
Okay, I'll grab them in just a second. Let me find his email. Where the heck did that thing go? Ah, here we go. Alright, let me grab the charts. Alright guys, we're still coming down here. Look at that hour. Now, that's last week's weekly trading zone. What's the swing low here? 14. So even though these are last week zones, today's only Tuesday, there's good carryover effect. So consider 1913. Consider being short below 1913 if. We all know that if means if the opportunity presents. Okay. Now, we're working off last week's zone. That magnetic attraction, for lack of a better term, that existed last week, would that just dissipate over the weekend? Or does that number still have some kind of meaning or strength? Let's find out. Let's see what happens. Okay, swing low here. was 1914. So if we breach 13, what we're saying is that we believe it's a high probability trade that price will actually go to 1911. 2 points for the day. All right, back to the email. Go. Passed my final exam, one and done. One trade in the S&P this morning for 8 ticks makes it 10 days in a row. And I start live tomorrow. Here's the trade. Simple slingshot short. Now remember, he has to get up before the markets awaken on Wall Street, and he has to trade pre-market in order to get this done. He doesn't have the luxury of that rush, that some of us experience at the Wall Street Open. I'm not a huge fan of the Wall Street Open myself. I like to see things settle down just a little bit. But there's the 8 ticks. Here's the trade. He also talks about the trade alerts and the importance for him, even though he's not trading the trade alerts per se, he uses the indicator set to do his trades, but a backdrop to the trades are the alerts, and you'll hear in that video that I gave you the link to how he uses them and why it's important. Gerald, it is cfrn.net/performance-tracker. Those are the tutorials that explains to you all the cool things that the app does. And he just added some new he added a new feature that you'll see in the video. He added a little tab where you can see how you stack up to where the blueprint says you should be at this stage of the game. Remember, the blueprint assumes it's going to take you 10 trades every single day to make your daily goal. Well, we all know that some days it takes less and some days it takes more. This is an actual graphic representation. He said, do you have any idea the kind of confidence that this gives me when I see that I'm, outperforming? And so you're going to see it. It's in the video. Now, anyone can go and watch the tutorial. It works with both DT Pro. It also works with Ninja. But in order to download the app, of course, you need to go into the members area of the website in order to download that. Okay? All right. Click the link there. Oh, okay. Yeah. Oh, you were looking for the link to the spreadsheet? Oh, okay.
Yeah, I was just answering his question.
Oh, okay. I thought he was looking for the link I was talking about.
Nope, but
Okay.
it's all good.
Got
It's good
it.
that everybody knows that.
All right.
I didn't want to interrupt you.
No. Yeah. It's for anyone that doesn't know, everyone should know that as well. CFRN.net. CFRN.net. The spreadsheet, Michael shows you every day during the recap. View live trading room results. Okay. And right here, to view our daily results spreadsheet from today back to January 2nd of 2013. Click here, and that'll do it. To view a trade-by-trade analysis of every trade taken each day, visit our radio archives here. So this is a visual representation, Michael talking you through every trade just as he did today on the show. And then this is a spreadsheet. If you're a spreadsheet kind of guy, you can go look at that. Okay? You know that thing they say about past performance being no guarantee of future results? It's a true story. That's why we don't live off the results of the spreadsheet. We live off of our daily bread, which is showing up in the live trading room every day, putting on and taking off trades in a real-time environment. Real money, real people, real trades every day. day after day. And it's always the same. I know some of you have been in different rooms where there's always the trade of the month and the this and the that, and pretty soon a certain amount of time goes by and this new thing that's been dreamed up, the group consciousness starts to realize, hey, wait a minute, the emperor doesn't have on any clothes. And that's about when the room mentor, it's about time he comes out with some new, whiz bang thing. It's the greatest thing since sliced bread. And so everybody gets all pumped up and energized again for another 30, 60, however many days, until people realize, well, that emperor doesn't have any clothes on either. And so that's why we don't change anything we do in the live trading room. Although we develop other trades and they're available to the partners in the partners area, we keep that trading room pristine. We just do the same thing day after day after day after day. Why? Do we want to be boring? Actually, yes. We want you to see consistency. Everybody wants consistent results from their trading, but few people are willing to put forth the consistent effort that it takes to get the consistent results. Consistent effort, and the return on that is consistent results. If you have not connected the dots on those two, you really should spend some time thinking about that, working on that. Request a private mentoring session so that Michael and I can walk you through that process. It really, really is important. All right, at this point we're going to go to our good word for the day. It has to do with your eyes. Your eyes. A divine masterpiece. We don't have much time, so we'll probably have to catch most of the trade alerts during the after show. We haven't done a good after show in a while, so maybe today will be the day. See how I feel when I'm done with all this. Psalm 139:14 says, I praise you because I am fearfully and wonderfully made. Your works are wonderful. I know that full well. Remember, the nexus thereof, or the crux of the apostrophe in Psalm 139:14 is this: I being a party of one, or you being a party of one, are wonderfully made. And that's an amazing thing in and of itself. Evolution says that where there's a want, nature will provide what's needed. Really? In Natural Theology, Dr. William Paley writes, to keep the eye moist and clean, which qualities are necessary to its brightness and its use, a wash is constantly supplied by a secretion for the purpose, and the superfluous brine is conveyed to the nose through a perforation in the bone as large as a goose quill, which is not too big. When the fluid has entered the nose, it spreads itself upon the inside of the nostril and is evaporated by the current of warm air, which in the course of respiration is continually passing over it. It's easily perceived that the eye must want moisture, but could the want of the eye generate the gland which produced the tear or bore the hole by which it's discharged, a hole through bone? Let the evolutionists tell us who bored the hole and laid a water pipe through it for the dispension of tears. When it encounters darkness, your eye's ability to see increases how many times? But nobody could guess this. When your eye encounters darkness, its ability to see increases. This is medical science, okay? 100 times? No. 1,000 times? How about 100,000 times? The finest camera ever made doesn't even come close. And what's more, your eye will find the object it wants to see and focus on it automatically by elongating or compressing itself. Both eyes moving in tandem must adopt different angles in order to fix themselves on whatever it is that's to be seen. Evolution tells us when the eye got ready to create itself, it had forethought for its own protection and built a bony ridge of the brow, which provided a nose on which to position the glasses many of us need. Then it provided a shutter to protect itself from foreign objects. Perhaps it takes more faith to believe in evolution than it does creation. What do you think? That's our good word for the day. Which takes more faith? Let's go to the chart. Let's see what we got. S&P 500 E-mini Futures currently trading 19.18 and a quarter. Okay? Over the course of this radio program, if we reach 19.13, we anticipate a move to 19.11. Okay? Which will be a 2-point for the day move in case you don't have your 2 points for the day as of yet. Now, let's take a look at some of the other alerts from last night real quick. We only got about 4 minutes. What we don't do here, we'll do later after we talk to David and after we talk to Jonathan. All right. On the S&P 500 E-mini Futures last night, the Concierge Trade Alert was very direct in its instructions. Consider being long above 58, which never happened, or short below 32. See? No matter how biased I might be to the long or short side, I'm going to give you the best long trade I can give you and the best short trade I can give you every single day. This initial drop in the S&P 500 down through 1932 made it down to 25 and a quarter, about 7 points. But as we can see, it did continue on down to 1919 and a half. So you can do the math from 32 to 19. It's a good little piece. Now, you may have only been looking for your 2 points. 2420 blueprint, get your 2 points, done for the day. That may be how you rolled. However, we do know that important prices in important areas are almost always tested. And so price comes right on back to test the important area, drops again. Actually, it tests and it drops to the close here. The close is 30 and a quarter. Okay? So after this drop, we run above, we drop again, we get down to 30 and a quarter. We may have dropped even lower inside of the hour to rise back and close at 30 and a quarter. This drop from 1932, the initial hour took us down to 27. That's 5 points. You only need 2 to be done for the day. The continuation of that drop took us all the way down to 1929. No, make that 1914 and a half. Okay, so that's over a 15-point move. Price then rushes back up, tests the important area, and down we go again. This time we drop it to 21 and a half. This time we drop it to 25 and a half, and this time, look where the swing high is, exactly 32 to the tick. Now we all know the deal, how it needs to go 1 tick above. It's possible you could still be in this trade from this move here if you're trading a bigger picture type scenario. But you know what? The fact that it ran back to exactly 32, I take some satisfaction from that. And now we're in another beautiful drop, which so far has taken us to 1675. Real quick on the bonds, how many ticks do we need? 4. 31.25 per tick times 4 ticks, $125. The trigger was to be long above 156.02. The first move took us up 6 ticks. The next move took us up 7 ticks. And then this big one here took us all the way up to... let me get that out of my way. There you go. Okay. 155.18. So that's a 16 tick move at 31.25 per tick. Okay. Crude oil triggered on the long side to the tune of $520 per contract. That's what the market made available. Now, how many ticks do you need? That's 52 ticks. How many ticks do you need? You just need 10. Then it triggered on the short side. Okay, got a little bit of a false start here. It dropped actually 15 ticks, so that's more than enough to get your daily goal. This one, not quite. And then on this one, we've dropped $1,700 per contract. Would I expect you to get all of that? Absolutely not. If all you took out of it was your goal for the day, you did real good. And don't let anybody tell you different. Okay? Alright, soybeans. I think that's the last one I had a chance to mark up. Short below 878. We need 2 pennies to be done for the day. 876. But we have already dropped to a swing low of 869 and a quarter. Okay? So that's about a 9-cent move in soybeans at $50 per penny, just like the S&P pays $50 per point. I didn't get a chance to mark up the Dow, and we're out of time for the moment, but we'll come back to this. It did say to be short below 161.90, and so that's going to be right about there. Okay. 161.90. Yeah. Close enough. So we need 20 points. This first drop took us all the way down to 57, or call it 60. That's a 30 point drop. And then we come back to test the area and do it again, and then we come back to test the area and do it again, and then we come back and test the area and do it again. So was there an opportunity to get the 20 points you need to stay on track with the blueprint in the Dow? Yes. Soybeans? Yes. Crude oil? Yes. Bonds? Yes. S&P? Yes. Russell? We'll come back and take a look at that, and gold later in the show. For now, we got to head to Vegas. We're a scant few minutes behind, but we're on our way straight away. Don't go away. We'll be right back with David from Page Trader. Don't touch your radio dial.
To CFRN, a community of believers who trade for a living. To learn more about who we are, what we do, and how we do it, call toll-free 1-866-928-3310, and we'll send you out a no-obligation information kit absolutely free. 866-928-3310.
We don't need you now, be on your way. I thank the Lord for love like ours that grows ever stronger. And I always will be true. I know you feel the same way too. Oh, I love you.
Good morning, Dwayne.
Hello, David. Good morning. Welcome to the show. I started to play the creepy intro for you just to kind of weird you out, and then I stopped it in its tracks.
What is that music?
It's just some stuff I stitched together.
Oh, okay.
It really is. It's quite fascinating. I must say. Yeah, it really is. It goes a little something like this, I think. Is that it? What do I hear?
I don't hear it.
Oh, my goodness.
But what is that song? That reminds me. I've heard that before. I just don't
know.
remember where it's from.
I sampled it out of somewhere. I don't know. I can't remember.
Okay, okay, here we go. I tried to be the man,
Tried to be the boss. I even grew my beard out like Rick Ross. Then I tried to smoke something like Kanye, but I don't like blunts, and it just goes on and on. Just a little bit of fun editing up in the studio one night with obviously nothing better to do. So. And then I threw in the old thing right at the end, the two modems syncing up together. Remember that sound?
Yeah.
What a nostalgic sound that is. For some people, it's a needle
Still
scratching on the vinyl of a record, And now, for a newer generation, that sound of nostalgia might be two modems syncing up, starting to talk to each other.
Well, as we've discussed, there still are literally, I think, millions of users that are doing dial-up.
Yep.
That sound is still the current. There's nothing nostalgic about it yet. It's still what they're doing.
It truly does amaze me. I mean, if you look at AOL's numbers when they come out during earnings season, if I'm not mistaken, we talked about it on the show last earnings season or the season before, that the lion's share of their revenue does, in fact, like you said, still comes from dial-up service. I can't help but wonder if people put it on their credit card, 20 years ago and just forgot about it. But I thought my way through that. Your credit card doesn't renew on the same month, so they couldn't just roll it over without your permission. They would have to call you, because most credit cards now they're good for like 3 years, 4 years, 5 years, however your bank does it, but they don't renew on the exact same month. And I think partially that's done to discourage people from trapping you into the eternal rollover of some service that you signed up for. Mm-hmm. And maybe you're not very meticulous going over your credit card bill. And some of the most nefarious of the bunch are the ones with like 99-cent charges. You get billed 99 cents every month. You're not sure what it's for, but calling your bank and going through these really long numbers to try to track down who's hitting you up and what it's for. And it's just, I think many people sweep it under the carpet and go, next month I'm going to call on that. And we really, I have on occasion looked at my credit card statement, and there were like so many charges that I just wasn't familiar with, and they appeared to be recurring charges, that I just called up my bank and I said, you know what, I lost my card, I'd like to get a new card with a new number. Oh, okay. That stops all that auto debit stuff in its tracks. And the legitimate stuff that you really do want, well, when that provider goes to bill your card, it doesn't go through. They send you a legitimate email that says, hey, we tried to bill your card for your service for such and such. Oh, yeah, I got a new card. Here, let me give you the new number.
Well, I can tell you a little horror story that's counter to that, which is that many, many, many years ago, I had a fellow that was prior to Johnny, which is our computer guy. This guy had somehow, because he was card number, and he had signed up for one of the dating services. I forgot which one it was, but I couldn't get them to stop billing us, and I finally canceled the card and got a new card, and right on time, there they were again billing us on the new card.
Now, did you get a card with a new number?
Yeah, a new number, new everything. And so they have a way of tracking, the more sophisticated ones have a way of tracking what is issued to you. I don't know how they do it. It's a very involved thing probably, but they're able to do it. And that charge just kept appearing. So I was, believe it or not, I was forced to call and write a letter to the president of the company. And I didn't get a direct response from the president of the company, but I made it very clear that I was going to, go to the district attorney here. My next step was going to be with the district attorney if the charge continues to appear. I've made it clear I don't want the service, and what they're doing is stealing my money.
Right.
I've made it clear, more than clear, that this is, and so, and then of course I had to beat the guy that worked for me into a coma so that he wouldn't do that again.
Did
and
they
I did
offer
that with
you
a piece of
any kind
paper.
of a refund or anything?
No, they didn't. I was just happy to have it done. But the recurring thing, your last resort is definitely try to change your card. But if they're very sophisticated and they're able to actually do the transfer and catch where your new card, however they do that, your next thing is to go to the district attorney's office and let the company know that
now,
you're doing that.
Was the same guy still with you? Could he have punched in the new card number again? Or
No, he didn't have the new card number. We knew that he had the old one, and we
okay.
didn't give that to him. So, no, it was immediate. I mean, as soon as we got the new card, it was starting to show up on that bill again. So, really, that's a very, that's, what's the word? I can't think of the word, but it's not an honest way to do business.
Disgusting.
Where you just make it, you just make it impossible for people to cancel, and so, that really is. That's not reputable or whatever you want to call it. If somebody were to call us and say, listen, I want to stop our service or whatever it is that they're on, like any reputable, you just stop it. Yeah, great, fine. It ends on this date. There won't be any rebilling. We send them a confirmation of that, and it's done. These companies believe out there that they have to, push this extra edge, and all they're doing is causing themselves bad rep and all that stuff. And maybe it works for them, but that's not how you have happy people, or satisfied people. Or whatever.
Who wants to live that kind of life?
Chase all that stuff.
One of my first mentors in business, George. Oh, George, I wish I could find you if you're still alive. But anyway, he took me under his wing as a young man. He taught me so much. One that he taught me is that all men have a little bit of larceny in their heart. He goes, just accept it, and it's a truth, and I did. But then he also told me and taught me that when one of your customers has a complaint or an issue about anything whatsoever, no matter, you just fix it. You don't fight, you don't argue, you don't shove some kind of contract in their face, or he says, Dwayne, it's not worth the time and it's not worth the energy. It's one person, it's one invoice, it's one bill, it's one whatever. He said, and you feel so much better about it. He goes, even if you fight and wrestle them to the ground and win, you feel kind of, it's a cheap victory. You still feel a little soiled and dirty. He said, as soon as it arises, just fix it. Take care of it. Whatever it requires, do it. Go on about your day, and you'll feel better. They'll feel better, and ultimately your company will stay healthier because of it. And so I've always followed that advice.
Well, there you are.
So, what a character this guy was. He's my buddy that loved to go to the track, and he made me go with him because I was an employee, and I had to.
You're talking about the dog track or the horse track?
Both, yeah. Oh. Yeah, and he loved it so much. It was just such a passion, and he was such a lousy handicapper. And I used to sit there and watch him. I used to pray, oh, God, please let him just win one race, I mean, because his whole life had kind of fallen apart on him. He had lost the big business that he owned, and the wife was in the process of going. And, me and the track, we were the last vestiges he had to hold on to of a once incredibly powerful and successful life. It was me and the track, and a pack of Marlboro, and a pot of coffee, and a pot of iced tea, all at the same time, and an ashtray with like the pyramid of Giza, piled up in the middle of this thing. This guy would light one off the end of the other all day long. I mean, and he had some of the funniest sayings, and it was just, I don't know. It was a little window, little chapter of my life that as odd and bizarre as it all was, I'll forever be a better person because of it. You know, not only did he teach me right things to do, such as how to handle, customer service, etc., but in the manner that he lived his own life, he was a living example of things not to do. Right? He wasn't trying to teach me those things. I just learned them being around him and observing and seeing what happened to his life as a result of some of the decisions that he made, and it wasn't good. And so I learned from both ends of the spectrum from him. So, yep, they say when the student's ready, the teacher will arrive. I was ready. So, oops, there he was. So how you doing, Dave?
Good. Just keeping an eye on the markets. We had in the S&P, of course, we've had a very sizable move down today. We're down $53 on the S&P. That's a very
huge.
Important.
That is, by my best calculation, refresh my data, bring it back. Come on. That puts us down, S&P 500 cash market down 2.62% on the day.
Yeah.
The Dow's down over 2%. Let's see about the Russell. The Russell is down over 2%. And the NASDAQ is down, every one of them. Okay, the Dow is down 2.5%. The S&P 500 is down 2.5%. NASDAQ is down 2.5%, or 2.4%, and the Russell 2000 is down 2.18%.
Well, today's session had options, so to speak, to do things differently if they wanted to, and they chose to just show the pressure, the selling pressure, and continue the move down. And this leaves the market, this sort of answers some questions, at least in our work. It clarifies the market for us to a certain degree, and that is useful information. There was a point early this morning where we felt that the market had the possibility of not that it was a forecast, but just a possibility of one of the routes, the pathways they could have taken, even though we believe that the market needed to come down and would need to come down and test $1,912 again at the minimum, and it needs to do that into at the latest Thursday. So we knew that even if we did rally, and that would have been the easier setup for us, if they had a further rally this morning, it would have been a really, really great short sale under these sets of conditions that we had laid out for the roadmap and so on. But because they're going this way, this kind of solves, or not satisfies, but it kind of solves part of the puzzle for us as to what the intentions of the market are, which is for lower price. And your mind allows you to get into a position that you shouldn't be in, which is the position of saying it's gone far enough when you don't really know the scale and the force that's pushing the market. And so it only came for me personally, it only became very clear to me that overbought and oversold is really it really doesn't exist, is because the market's movement, the degree of its movement is really reliant upon the force that is pushing it. And if that force is larger than usual, then it's going to express that force, irrespective of what an overbought or oversold indicator would be. So those are the kinds of things that I think some traders might want to exercise from their head. Exorcism is to get rid of evil spirits and stuff, but most people don't need an evil spirit to be in their life in order to scare themselves silly, either with bad thoughts about the future or fear about something. And I've told you before, and we've talked about this before, is that if you were to sit down and write down you can't do it every split second, but if you could make a note of every fear that goes through your mind, you would realize that you're pretty much nothing but a bundle of fears. It's interspersed with some laughs and some good times, but even the fear of those good times ending is another fear. The fear that the party is going to end and you're going to have to go home. Fear that the friends are going to leave your restaurant meeting and you're going to have to get into your car. All these things, these fears run in. And we don't want to be living our life off of that. We certainly don't want to be trading off of fear. We want to be trading off of a kind of enthusiasm to invest when the odds are in our favor and all the things we've talked about. So S&P is not a beginner's market as far as I'm concerned. This is a market that requires a real expertise to be able to trade it consistently and make accurate judgments about what its likely next move is going to be. It's quite a handful, and it's a beautiful market. We forecast more in the S&P than any market. But having said that, I do know that after many years of studying and looking at markets and all this stuff, I wouldn't put a newbie in the S&P. That's not something I would do. I think there's much better markets for people that are new that can get them to understand the nature of markets and so on without putting it as sophisticated as the S&P is. So covered a lot of ground there, but that's how I feel. And so yeah, we have a wonderful big move down today, and the testing of this today's low, and they're going to be lower than this at some point here, but not today's low, but the actual roadmap level is 1912. I mean, they've completed it on a daily basis by going to 1914, but it's not really, it doesn't have to be completed today. It's really for Thursday plus or minus a day. So we'll be in much different position by that time, but they will have tested that level. So there you are. Just be careful and make sure to use protective stops in this market. And if they stop you out, fair enough. Just you don't want to be stuck on the long. You don't want to be somebody that was long from 2000 and have the market down here at 1916. Stopping out at you'd really would prefer to have a stop, be hit rather than be long from 2000 as an example and have the market down at 1915 or something, having 85 points against you or something like that. So there you are.
10-4, good buddy.
Yeah. I've been there. Everybody has been there. We talk about this, and I know that we would love, I think, any legitimate and, I don't want to say the word caring, but somebody who's concerned about others who are trying to trade. No one wants other people to have to burn through hard-earned money to learn to trade. But I really have not seen enough evidence yet that someone can get there without having to suffer some in the markets to learn the nature of their own nature, which makes them act wrong at the wrong time and make bad decisions and so on.
The armchair historian says, speaking of the racetrack, Mickey Rooney said, I lost a $2 bet 65 years ago and have spent about $3 million trying to get it back.
Right.
Oh, man. That, well said. Thank you, Burwell. All right. So, guys, on this little trade over here, we're looking for a break of 1913 to trigger this thing in. We've got down to a low of 14.25. Previous swing low was 14, so we'll see what happens as the show progresses. Guys, if you have questions for David, Jonathan will be joining us here shortly. And we do have some topics that we're going to cover today. We're going to cover movies, War Room. Maybe that is a movie, The War Room. Risen.
The War Room. Okay.
Dr. Carson moving up in the polls. And the different types of traders, algo, market makers, and retail. But we have first questions for David, and so let's get them cranking. Pop them in the chat box. David, is there any market in particular that you want to, the crude market continues to just be the crude market. I mean, look at this thing again today. What has it done? Well, that's considered quote-unquote a correction, right?
Well,
When
yeah,
they
I
speak
mean,
about
maybe for stock
broadly
market.
about
Yeah.
markets, 10%, that's a major correction or something. Um, you want to start there? You want to talk about crude oil?
No,
Or
sure.
you want to talk about
Crude is
S&P
fine.
first? Or?
No, crude oil is fine. I'm not sure that the 10% really applies to commodities in the same way that it does to the stock market, but we have a really, really good down day in the crude oil today. We felt, and we mentioned this yesterday in our Williams Edge meeting for the crude traders, that there were two very important levels on the upside that crude reached yesterday, and that if they closed below either or both of them, which they did, that the market would then have a multi-day decline. And so most of what the multi-day decline, what we would normally consider a multi-day decline, has occurred all today. So we do have some that are short in this based on the completion of these levels, and I'm very happy to say that even though this decline is larger than usual, generally we would expect over a couple of days anyway, maybe even 3, a decline of this size. So the market's doing what it normally would do. It's just reversing pretty sharply and pretty powerfully here. And again, you can look at this and say, boy, that would have been easy to hold. But when you're actually in the trade and you actually see the gains, a very peculiar part of human nature goes to work on most of us, and that is that you're able to hold on to losing positions until the market goes against you and your broker's calling you, but you're unable to hold on to winning positions with anywhere near the same ability. And that's because once we get ahead in the market, it's torture to see them take any of it back, and there's something about human nature that makes it very difficult to hold on these gains. So once you go from perhaps a beginning trader, the steps of a trader are essentially you're a beginning trader, and then you're a losing trader, and then hopefully you're a breaking even trader, and then finally perhaps you're a successful trader. And in those steps along the way, you find that holding you back is this problem that we're talking about, which is that most would not be able to hold on to a winning position because they're not comfortable with any pullback at all. It gets harder and harder as time passes, and but when it's a losing position, because of hope, they're able to hold on. So hope may be something that you have in other areas of your life, but it's really a poisonous part of the human nature to employ in trading. If you want to be on the long side and hope that it goes further, that's fine. But usually hope is used to hold on to losing positions until they're. That's why we joke sometimes. If you're in a good trade, you'll hear us say, "Hey, hold on to it like it was a loser," because that's what most people can't do. They're not able to do that. So you'll find that out if you're new to trading, how difficult it is sometimes to hold, or in most cases, to hold on to winning positions. But strangely enough, it's very easy to hold on to losing positions. And you have to be able to put your hat on backwards, so to speak, and learn to do it the other way. And it has been hard. I'm telling you something, for an energetic person who always wants to do something, and I'm describing myself, you feel like you want to get in there and do something, you want to get in there and take some action. Boy, when you have a winning trade, you really do feel like you want to do something. You just can't do enough, and the doing is your problem there. If it's a winning trade, you place your stop. Especially if you have a knowledge of where the market might likely go, that would be an ideal thing. But I have to tell you, even with that, and our work is specifically designed for very specific indications about where markets are going to go and when they're going to be there and so on. Even with that, it is very difficult to overcome that. And that just goes to show that whatever your problem in life is, whether it's trading or whether it's people-related, relationship-related, nothing external actually fixes that problem. if you were a person that said, I just don't feel like I'm worthy, and all the beautiful women in the world told you how beautiful or how nice you were or whatever, because the problem is actually internal to you, it really can't be solved externally. It's still in there. And you may nod, you may smile, you say, well, what a nice time and all that stuff, but deep down, you still don't feel worthy because you haven't gotten over that. You haven't seen through that mistaken self-identity yet. So this goes on in all kinds of areas. So it goes on in trading as well. So there's another weird thing, and I don't want to go on too long because I know you got Jonathan coming on, but another weird one that happens to people, and this happened to me when I was first starting out, and I remember I struggled with this, which is that going back to the worth thing, the self-worth thing, was that you're guilty or feel unworthy about taking money from the market, and you may not even be aware that actually is in you. I actually believe that most of what people believe, not what they say they believe, but what they actually deep down believe, and I mean way down there, they're not aware of. So when most people say, well, I believe this, or this is my philosophy on that, that's not really, in most cases, what they believe. I believe. Most people, their actual beliefs are quite different, and they're in many cases may not know what their own actual beliefs are. They're so used to saying, I believe this, I believe that, I believe, that they don't really almost remember what they actually truly believe. So we all have these levels, and deep down there in me was an uncomfortableness with the idea that I'm not doing anything productive. This was a weird thing for me, and it stuck with me for many years, that I wasn't doing anything productive with my life. I'm staring at a screen, and I'm going to hopefully, maybe, probably not, make some money, at that time, and I just felt uncomfortable with the idea that I wasn't doing anything really productive with my life. It just felt weird, and I had to get beyond that because that was interfering with any success that I might have. It's operating. It's there working against you, and you have enough other things working against you. That's why I always say, and then I'll shut up here, but when you do get your inner life together, you're looking at the markets with an enthusiasm that is tempered with knowledge and maybe even a kind of wisdom that you've picked up over the years of watching markets and so on. But the enthusiasm is that you're not working against weird accumulated thoughts and feelings that you still haven't worked through. And you're able to look with wide eyes and clear eyes right at the market and really work directly in contact with the market, as opposed to in contact with all these accumulated strange little imps in our brains. And so the more you know about yourself and have cleared yourself of some of these things, and that's a whole subject unto itself, but the more you've done that, the easier it is to take on a task like the markets and not have some unknown thought or feeling working against your success. What a unfortunate thing it is that is the case, and for many people, and it was for me, and it became conscious to me that I was very uncomfortable just doing this for a living. It bothered me that this was not productive. No one gained from this. It was just a way of getting somebody else's margin account money into my margin account money, and it was bothersome to me. It bothered me, and I had to get through that because that was hurting my approach. That was hurting. And so we all have these things, whatever they are. They could be guilt. They could be any number of things. And some people also have the other side, which is that they have way too much greed. They feel the market owes them. They feel the world owes them. Let me tell you this. If you think the world owes you something, the world's going to punish you because it doesn't owe you it. You go out and you figure out what it is you want to do with your life. But the attitude that people owe you something is one that this administration, I'm sorry to go into politics, but this is being built up in thousands, hundreds of thousands, millions of people, that you are owed something, that if you're not productive, you're owed something. And, we've all talked about that, and we hope that changes, over time. But, just in ending here, the being a human being we're all complicated. We have a complex set of things that are at work in us. And if you can clear that out through self-observation and through your own insight into things that you've picked up over time, ideas, wrong ideas, and strange ideas that you've picked up over time, if you can watch those in motion and therefore begin to clear their force on you, you are now accumulating your original energy, if you were. It's not diffused over all of these other processes that are going on. And you have a very direct sense of what you are doing with your life. You have a very high amount of energy to do it, and you're not blocked and stymied by uncomfortable and yet even unconscious, in many cases, feelings, fears, and vibrations that keep you from really succeeding. So trading definitely is an inner game, just like anything else is, to do well. And you'll see, this, that athletes and other greats of any kind, they have to have some transcendence over their own fears of being good at what they're doing or whatever it is in order to really be great. And so do we. Even to be good at this, you have to get over that. So don't be afraid to look at this stuff. Start with the small stuff if you can. But you'll find, if you do this, you'll see that there's a lot of stuff operating inside of you and others that you may not have been aware of, and you start catching it and realize, wow, where did I pick that up, that idea? And before you know it, you're starting to become more aware of those things. They have less power over you, and then a real kind of intelligence starts to go to work, because mechanical processes like old thoughts and old fears popping up, that's not intelligence. That's just an old repeat of a vibration that you're very used to and probably not even aware of anymore. When you start getting rid of those, a real intelligence that you already have starts to operate. It's not blocked anymore, and you're much happier, you're much better at what you do, and you may even find that you can do just about anything you want and be a happy human being and be good at it. And that's really success in life. So there you are. Dwayne, I don't want to hold off Jonathan if he wants to come on today. I'll save my charts and things for perhaps tomorrow, unless you have any extra time here. Dwayne, I don't think your microphone is on.
I said, yeah, let me go ahead and bring him on. And you can say hi, and then if there's anything,
sure. Okay.
I was waiting for some questions to show up for you in the chat box there, but apparently everybody's got everything covered.
Okay.
I guess, because they don't seem to have any questions, which is a little odd, considering we have a house full. So, guys, this is the point where you participate in the program. This is why we do this, to help you with your trading issues, whatever they might be. Now, Jonathan, if you're logged in, I don't see you, so I'm guessing you just sent me a text with an itinerary, but I don't see you. Did you perhaps dial in? Because if you dialed in, I can't see you. That's the problem there. If you're dialing in, if you can hear my voice, call 866-928-3310. 866-928-3310. And Bert or Leslie One will be happy to patch you through to the program. Just scrolling back through here to see, there's so many names. I'm trying to see if I missed you somehow as I scrolled through. I will get you a panelist link so that we don't have this problem. Let me shoot him. Where'd my phone go? There it is.
This is his day?
Oh, logging on now. Yeah, give me a minute. Sorry. He's having a computer issue. Yeah, so go ahead. If you got a chart you want to show, go ahead and show it.
Well,
it's taking him a few minutes. He's having some kind of computer issue.
Computers have problems?
Henry said, let's see, Marvin said, David, what you saying? People do not know, they do not know one. Marvin, take another stab at that, okay?
Is that a question or a statement?
I don't, honestly. It says,
sure.
David, what you saying? People do not know, they do not know one. Oh, David, can we see your S&P chart? That's what he wants to know.
Well,
you can see my S&P chart. I don't know if David wants to show you his S&P chart or not.
No, yours is fine. Yours is fine right there. That's where the S&P is.
Did you have a question, Gerald, about the S&P? Henry has asked, David, do you have a forecast for the S&P?
I do. The general outlook is that, and we gave this out earlier today in our meeting, in our 8 o'clock or 8:15 meeting, which Pacific time, which is that we do expect the S&P to be going lower into Thursday plus or minus a day. So the force that is at work here is a force that would normally culminate, barring some great huge reversal. The normal thing is that we would be heading lower into Thursday plus or minus a day. So tomorrow's Wednesday. We also last night, this is an interesting thing. It's unfortunate that I wasn't in the office at the time, but I had gotten a phone call letting me know that the market was down about, I think at the time, maybe 7 or 8 points after the market closed. And I realized in that conversation that the market was very close to breaking a level, like I think it might have been 62 or something, that would indicate that we would be down at 28 in the second hour of today. And so I gave that information to Jerry Fagnant, and he gave it out to a number of our subscribers, because I wasn't at the office. I couldn't do the processing of it and so on. So several people were able to get short for this sizable move down to 28 today, which has happened. And now that we're below 28, that is again the weaker position. And again, don't let the idea of oversold, it's gone down enough now, get into your mind, because I think the market still wants to see lower prices into Thursday plus or minus a day. And so tomorrow is the 1 day early for that. And that's why I'm saying that where we are right now, in spite of any bounce here, I think that there's a very good likelihood that lower prices are going to be seen.
We have one final zone on the downside, and let me tell you, it is way the heck down there. It's way down there. So we'll see. We've still got plenty of week left for that to happen. Now, this little double bottom that we've got sitting up here in the S&P for today, 1914 as a low. Our daily radio show trade that we try to give you at least 1 2-point trade every day on the show is 1913 to 1911. So we'll see if that comes to pass. If it hasn't come to pass by the end of the radio show, I'll either leave you with that or I'll direct you towards a different market, perhaps. Or I like to do it in the S&P, though. I like to be consistent. All right, what else is in the chat box? I still don't see... Jonathan, as soon as you get logged in, go ahead and type me a message in the box. I think he had to reboot the whole 9 yards. So if you want to show a chart, David, we got time.
Well, I got one or two I can show, and then we'll...
Okay.
Sam, I don't have all the stuff we've done, but it's only Tuesday yet as well.
Yeah, it's early.
Let's see, a couple ones. This is gold on the left-hand side. We messaged yesterday to be long gold as soon as they were above 1137. They closed hourly, and this was the hourly close at 1138.10. We booked some profits at 1145 today. They made a swing high at 1147.30. And we're watching a decent pullback here, but I normally am thinking we're going to still see, even if we are stopped out, which we've not been, but even if we were, aside from that, we still believe that higher prices are coming likely into next week. And so we're bullish on gold. There's a few caveats that could change that, but the forecast is for higher prices into next week. So that's something that we're looking for with the usual pullbacks and so on. And that's, gold is trading at 1139.6 right now. And so we're interested in that. This middle chart is an interesting chart. This is a two-step roadmap that we drew out for our subscribers yesterday. At the time, the market was, it was something like, I'm trying to slide it over, it looked like this at the time. And what we drew was a move up to 84 to 85 prior to midday. In other words, this would occur prior to midday. And then a decline, and I mentioned this on your radio program yesterday, that the market was going to go back down. It was at about 73 on your program, back down to 64 to 63. And it would do that after midday. And so from this point here, our meeting started late in this hour. The market moved up. It made a high of 83.75 against the 84.85. It did that prior to midday, as we suggested, and then it declined all the way back down to what I mentioned on your program yesterday, 64 to 63. The swing low was 64, and do that after midday, late in the session. And so this was a great example of a two-step roadmap where the market, which appears to be random and appears to move on its own, no, that's actually not the case. In order to be able to make that forecast, there's way too many micro forecasts that are being made. Like, as an example, the direction of the market up, when it's going to make the high, time, what price it's going to make, 1984. All these forecasts are being made. It's going to turn. The direction is down. It's going to go to 64. When late in the session. There's like 6 or 7 forecasts, if you think about it, all in this 2 steps. And so you can't just be lucky and figure that you can just go out and call the market like that. It actually, there's a science behind it. And the market isn't just it's not an unholy free-for-all where a bunch of people are screaming and yelling, which we've seen in the pits. That is what's happening. But what is really happening is that the market has a nature. And as you watch markets and study them, you'll understand at whatever level that they have a nature. And you'll begin to understand at whatever level how to begin to use that nature to your advantage. Everything has a nature. Bring me one thing that doesn't have a nature in life. What is it? Show me something. Does a leaf have a nature? Yes. Does a drop of water have a nature? Does a piece of dirt have a nature? What doesn't have a nature? And that includes the S&P 500 and all these other markets. We may not understand them fully, but we know now for a fact, and I've issued a challenge on many of our webinars for any academic person who believes and has a high degree of education to come check out our work and see if he can find that it is random, that these forecasts are random. We haven't been taken up on that yet, but I'm hoping at some point that we will. And I can tell you now that whatever and whoever that person is, he's going to leave that meeting or that series of days or weeks with a very, very different view of these markets. There's no way he could walk away saying, this has just been a bunch of really good guesses that you've pulled out here. But it won't last forever, Williams. You'll mess up at some point or something like that. Over here, this was Monday, August 31st. Further decline in test of 1964 to 1963 is likely later today. This was after we drew this out for our customers. Then in the messenger window, we gave people from a 1972 down to a 1962, a nice trade based on this. So that is what we have for right now, and I'm sure you have Jonathan there now. Dwayne, I'll switch this back to you, and you can let's bring him on.
Now let me go back to my phone. I think he's still having trouble getting logged on. Let me look. Let's see what's up. Oh, he says I'm in.
Oh.
Okay. All right. So let me scan over here and look for you. Hey, Jonathan, I still don't see you. Where the heck are you? Oh, there you are, because you're logged in as a panelist. That's right, you have a panelist link. Well, then just say good morning, or good afternoon, or
good
howdy.
Morning.
Hey,
good
welcome.
afternoon.
Glad to have you with us, man.
Good morning, Jonathan.
Good morning, Mr. Williams.
There was a question here that says, I watched David's video from the Las Vegas presentation about day trading. David, I didn't know you had a video I didn't think you videoed any of those things. Is there some confusion or? No,
I was at a expo.
Oh, that thing,
the
online traders thing. I got you.
Yeah.
Okay, all right. Okay, I watched David's video from the Las Vegas presentation. Read day trading. It seems that David likes the longer, bigger moves, but CFRN is based on scalping 8 ticks a day. How do you two find common ground with your trading approach? Common ground? Well, I don't know. We've been hanging out together for 9 years. When I first met David, he had a very different product than what he has today. He's gone in a little bit of a different direction, and we have kind of stayed our course with establishing a daily goal and then using the profits from reaching that goal on a daily basis to grow our business by using profits earned in the market to add additional contracts. Now, David, of course, would need to speak for himself in regards to his business model now and how it's changed over the years and what he focuses on now. So if you'd like to say a couple words, David, go ahead. And then, of course, Gerald, you can always call David and chat with him by phone.
I think it's a matter of a couple things. Number one, a person could, ordinary investor or trader, could make his own decision without regard to what I or Dwayne is doing as to what is best for him. Maybe he only wants to trade for a few minutes each day and he has to get out of the house, and maybe he can, pop off a quick short trade utilizing Michael's and Dwayne's material and so on. Or perhaps he's somebody who is sitting in front of the screen and maybe wants to go for the longer term. From our perspective, I think most people rise to whatever their best use and understanding of the markets are. And so if you're if the realm of the smaller trades is what you're able to do well, then people tend to do that. That's where they stay. I'm talking about a trader or an investor. If you're somebody who does better or found out that you do better with the longer term, you tend to do that. From my perspective, I'm simply trying to I'm more of a researcher, although we do trade and we do show our statements and so on. I'm more of a researcher or a thinker about how things might really work, a thing like the markets or something. And because of my discoveries of certain ideas and principles and so on, that led me by itself to these larger time frames and to the fact that there was so much more to be able to be gotten out of the market from my perspective. So, and that in turn changed the business model because I was able to see something that I couldn't see before. But I want to remind people that, and I think many of the listeners know this, I'm sure Jonathan knows this, that it often takes many, many years for people to fully understand what they understand and they are able to do it, and then many more years sometimes to then exceed that. And it certainly was the case with me that all this doesn't come overnight. It comes through lots and lots of looking at markets and thinking about them and practicing and doing experimenting and so on. And also luck plays a part in this. About if you're just at the right place at the right time, sometimes you can see something. So I don't think there's a conflict because it's a matter of personal preference and it's a matter of skill sets and where you want to apply those skill sets. Do you want to apply them to the very short term? Do you want to apply them to the very long term? And I'm applying in roadmaps, I'm doing wide open everything that we're capable of doing. So when our customers come to us, I want them to get everything that I can possibly do, the very best of what I can do. And that's where we are. So our particular level, if I get better at it, I hope I do. If I'm able to get better at it, our customers will get that new level. But I'm trying to give everything at the very best and highest level. I'm sure others are as well. And if that changes over time or if a new understanding comes about, that might even be improved. And what I am working on, just for a last thing here, I am continuously working on trying to understand what I understand rather than just use it in the market. I want to understand better what it is that I've got already in my toolkit, because that's how I've made success. I'm not out just looking for new ideas. I want to see what it is that I have and really deeply understand it, because a lot of new ideas are right in that same toolbox that I currently have. The oceans and the skies and the planets may have all kinds of wonderful things, but we have a lot of discoveries we can still make right here on Earth and right here on our own little toolbox of whatever your methodology is. So there you are.
Much of what we do came to us via historical observance. In other words, certain things that we do, weekly trading zones, for an example, we set out to do the zones with a very definitive purpose in mind, but over time, through historical observations, we found out that there were these, I don't know if you want to call them side benefits or whatever they were, and I spent some time trying to figure out, well, why does this happen? Why does this happen? And I realized that, at least in my case, I was burning up a lot of time trying to figure out why something that was consistently happening again and again, day after day, week after week. I was trying to figure out why, and I reached a point with some of the things, not all of them, some of them I'm still pursuing, but some I've just put them, I file them away in the drawer that says, I don't really know why this is so consistent in its behavior. I've given it a good run through, and I'll just continue to monitor it. And the second that it no longer behaves in that manner, I'll be the first to notice it, and I will address it accordingly at that time. But in the meantime, I'm going to just move on and move forward, and I'll continue to use this. It's like electricity. When I flip the switch, when I come into my office and flip the switch and the light comes on, I mean, I have a very rudimentary understanding of electricity. I know that there's like some volts and some ohms and some wattages, and there's wires, and you can get shocked and all this stuff. And there's a kite and a skeleton key and a man named Ben, and there's all this stuff behind electricity. Mostly, I just understand if I flip the switch, the lights come on, and if I flip the switch and the lights don't come on, it's either one of three things: I have a bad bulb, I have a bad fuse, or I didn't pay the bill. And I'm okay with that. Other people aren't. Other people are tinkerers, and other people really need to understand how electricity works, or how a V8 engine works, or some people are not, satisfied to simply use a computer with all the wonderful software and do all the great things that the software can do, but they have a compulsion to get inside of the machine and understand how that motherboard functions with that, i7 chip sitting on top of it, and all the graphics cards. And different people strive for different levels of understanding, and so I always want to leave the door open. In other words, that file cabinet that I've kind of closed on weekly trading zones, I didn't padlock it. I mean, it's still open, it's slightly ajar, and the moment I notice something else, that if I can then go back through historical observance on that thing and see that, oh my goodness, that has been true for a long period of time and I never noticed it for whatever reason, that can be added to that pie. But I'm content to simply use it as long as it continues to work. It's not that I didn't originally have a desire to understand why, but I've kind of gotten over it and said, hey, God hung Pluto in the sky over here and not over there. Why? Well, I don't know. He just did. That's just the way it is. And so I'm good with that. I'll still rise and slumber at the proper times of day, and Pluto will continue to hang. It's not a planet anymore. What is it? What do they call it now? Is it a star?
They did reclassify it, but I don't remember
it got
the
downgraded
name.
to something, to a rock. I don't know. Okay, so Jonathan, I'm glad you had some issues with your computer. Was that what happened?
Yeah, I'm remote today, so I had to take my laptop with me, and I was having a little difficulty getting it to connect entirely.
Gotcha.
But I think I'm good now.
You good to go? Okay.
You sound good.
Well, David, I know you probably have to run. You're welcome to hang with us. Was there any parting comments you have that you want to make about the market and what's happening going on?
No, I'm fine. I appreciate the time today. Jonathan, I hope you have a great day here on the radio, and I'll see all of you back here again tomorrow. And I'll be listening in.
All right.
Thank you.
Thanks
again.
And Gerald, if you have more questions on that topic, just give David a call. What's your number, Dave?
They can reach us at 888-231-4702, 888-231-4702. The name of the company is pagetrader.com. Thanks again, and I'll see you guys here tomorrow.
Okay, Dave. Thanks a lot.
Bye-bye.
Bye-bye. So, Jonathan, well, here we are, another historic week in the markets. Crude oil we were talking about that earlier. Do you trade crude at oil? At oil?
No, I look at peripherally, but I don't trade the futures contract on it now.
Yesterday, can you see my chart?
Yeah. Hold on.
Yesterday we had $1,000 per contract drop in the market. It's $1,000 per contract drop, and then the doggone thing turns around and triggers on our long alert and runs up $1,000 per contract, keeps going, hits $2,000 per contract, and before the day was over, the doggone thing ran past $3,000 per contract. Now, that's not what we took out of the market. That's simply how far the market moved from where we published the alert to consider being long at that price, which was, in this case, the short side was 44.60, the long was 46.10. And then today, it's been, I guess, not quite as volatile, but pretty close, because we're down. I looked it up a minute ago. 7. It was 7% that we were down on the day. So this morning we initially ran to the upside, $520 per contract. That's how far the market moved. If you're trading our blueprint, guys, in crude oil, because it pays $10 a tick, you're just looking for 10 ticks. Now that's whether you're a 1 contract trader or a 20 contract trader. And take a look on this move here that ran up. The volume was 15,000 contracts in that hour. Okay, and then this big move to the downside. This move here was enough to give you your points for the day, and that one was 42,000 contracts in the hour. And then the big move right here, which came in the 10 a.m. hour, that one had 88,000 contracts. Now, that's the entire Russell for a day, volume-wise, what happened in that hour. Now, I don't know if you caught yesterday's show, Jonathan, but John B. had brought some news I wasn't aware of, and I guess, and Ed Corey says that this has been cooking for a couple weeks. Mexico has hedged their entire oil production for 2016 at $49 a barrel. So I don't know.
I was not aware of that.
Yeah, and I think they're a major producer on the grand scale, and so I don't know how that affects world markets. I mean, does that become something that the market is pegged around? I mean, I guess it can go substantially higher, and Mexico feels bad that they, settled for 49 a barrel.
Right.
But if it goes to, $30 a barrel, then they feel pretty doggone smart. So.
Sure. Who did they sell the contracts to?
That I don't know. Does anyone in the audience know who Mexico? Ed, I know Ed Corey. If he's out there, he would know.
Because if they're hedging it, they've got to be, somebody has to be on the other side, right?
Yeah, exactly. And Ed, by the way, guys, this Thursday is Ed's Thursday. Ed and Burwell alternate Thursdays. Burwell was with us last Thursday, and so Ed will be with us this Thursday at 1:30 p.m. Eastern. So, no, okay, well then we'll ask my friend Google, who sees all and knows all, supposedly, who bought Mexico's oil. Okay, that didn't quite. Who bought Mexico's oil? Let's go to news. Here we go. Here's the story. Perhaps $1.1 billion hedge to lock in a $49 floor. $49 floor. Mexico's concluded its vast oil hedging program for next year, paying more than $1 billion to guarantee it will get at least $49 a barrel for about half the world. Mexico's finance ministry said late on Wednesday it had bought options based on Maya and Brent crude oil prices that will cover 212 million barrels of oil at a cost of $1.09 billion. Mexico is very unlikely to reopen the hedge, a source close to the operation told Reuters. Counterparties to the program included Barclays and J.P. Morgan. So maybe that answers your question, Jonathan. That's who's on the other side of that trade. The program, a long-standing part of the country's strategy for safeguarding oil revenues from market volatility, ended on August 14th, which goes to Ed Corey's statement yesterday that this has been cooking for a while. The ministry said, suggesting it had purchased most of the options as oil prices entered a second deep slump. Oil traders who watched the market carefully for any signs of Mexico-related trades, which can be large enough to affect prices, said they first noticed the hedging in late July. Well, there you go, Ed. At least a month earlier than it usually enters the market. With U.S. crude plumbing 6.5-year lows at nearly $40 a barrel, and many analysts braced for a prolonged downturn, Mexico paid a higher premium for lower-priced options this year. You know, this shows how little I understand about some of this whole option business, because this is sounding to be a little something different than what I had understood. And so I'm not ashamed or afraid to admit that on live radio. Each day that I come to this radio program, I expect to learn something, just as you should. In its hedge program for 2015, Mexico ensured an average oil price of $76.40 per barrel, covering 228 million barrels at a cost of $773 million. Mexico has long been one of the few major oil-producing nations that uses derivative markets to hedge, a policy that paid off handsomely after the 2008 oil price crash and has also helped protect this year's budget revenues. Oil sales have traditionally made up about a third of Mexico's budget. So there you go. So that's the story behind the story that we've been talking about now for a couple days. So anyway, now I noticed that you had sent me some topics that you would like to chat about today. Now, you said movies, War Room, and Risen. Now, my question is, are there two movies out called War Room and Risen, or is that three separate topics?
Yeah, very funny. No, the War Room is a movie that's out right now.
Okay.
It was made and then backed by Sony by the same people that made Facing the Giants and what was the other movie? Fire something, I don't remember. I'm drawing a blank at the moment.
Facing the Giants. I don't know.
Facing the Giants was the first movie that this.
This is a faith-based drama. How the faith-based drama War Room became a sleeper hit. Okay. Yeah.
So there was a group, I think, out of a Baptist church in the southeast who decided to really go after producing and getting involved in the entertainment industry. So their first movie was Facing the Giants, and then I believe they've made two more, and this is their fourth. And now they've got backing of Sony, and Sony's actually created a division that's going to put out some faith-based movies.
So this movie was number 2 at the box office this past weekend?
I believe it was.
Wow. We were thinking we could do well just to be in the top 5, War Room's director Alex Kendrick says. Our last 2 films came out as the number 4 movie, and so that would have been fine with us. When we had a shot at number 3, we were ecstatic, and then when we ended up at number 2, it was just like Christmas.
Yeah. So the idea, or what I think, because I recognize, or having been in and around you and the radio show for years, that the faith-based folks who listen and participate, and not everybody, and I certainly don't mean to offend anybody.
Yeah, God's not dead. I mean, I
Sure.
was deeply touched and moved by that. We talked about it a lot here on the radio program. Stephen Hawkins even made a guest appearance in that movie.
Yep.
One of the more well-known atheists of our time, but who has made some comments that he now claims are taken out of context, but in rereading, I think Stephen might just be on the verge of wondering if maybe he might have got the whole atheist thing a little bit wrong.
Concur. But what I just want to encourage folks, especially those who are faith-based and believers, to make sure that they spend their entertainment dollars and support movies like this. I mean,
absolutely.
I think it's absolutely essential for us who want to make sure there's an alternative message to some of the things that are out there, that we spend our entertainment dollars and choose to make sure that we are supporting those who are trying to provide a solid alternative message and thought process within this industry that we know is one that is generally
corrupting our youth, tearing down the moral values of America. It's pretty horrific. And so along comes a movie like this with a budget of only $3 million. I mean, Sheldon gets paid $1 million per episode on The Big Bang Theory. It's a 30-minute sitcom. So take out the commercials, you've got about 20 minutes of actual content. Now, I'm not begrudging him his $1 million paycheck. I think it's pretty cool. But this entire movie was made with a budget of only $3 million. It was distributed by Sony TriStar Pictures and Affirm Films. And to be honest with you, Jonathan, I hadn't even heard of it.
Well, I'm glad that I was able to share something positive. I just encourage folks to go out this
weekend,
weekend,
go
on a date.
You know, at election time, you vote with a ballot. But when it comes to stuff like this, vote with your wallet. Let Hollywood know, I want more of this. I want I want a movie that I can take my children to, and not be ashamed or embarrassed or tell them to turn their head. The last PG-13 movie that we took our kids to, actually it was just Gabriel then, we took him to see The Boy in a Bubble or something, and it was PG-13, so we figured, well, you know, he's not quite 13, but, you know, we're there, parental guidance, blah blah. So we almost walked out, and when it was all over, I felt guilty because I didn't walk out. Not that there was graphic sexual activity in the movie, but it crossed the line of what I think should be acceptable for. I mean, I was a man of a certain age, and I was, I guess for lack of a better term, blushing in the darkness. I mean, I didn't want to see, you know, that. You know, there was nothing funny to me about this kid's boner. You know, I'm sorry. Yep. I just didn't find any silly slapstick humor.
You're not going to, you're not going to be embarrassed if you go watch this movie.
That's good.
In fact, I think you'll be challenged and you'll be entertained. I think on both levels. So I would encourage anybody. And then when I was at this movie, I saw a trailer and I thought it was very interesting for a movie that's coming out in October. Now, it's not necessarily done by the same people. It's called Risen. It's done by the gentleman who actually did Waterworld, the largest flop or the most expensive flop in the history of movies. He also did Robin Hood with Kevin Costner, but obviously he's got some kind of talent because they keep letting him do movies. But I thought the premise of the movie was really interesting, so I'm going to keep my eye on it, and I just was interested to check it out when it comes out and see what people think. It
says, will Risen, an upcoming movie about the events following the crucifixion and resurrection of Jesus Christ, prove as successful as Mel Gibson's gritty and controversial Passion of the Christ, which was the top-grossing Christian movie of all time. Passion. Now, I was told that as of, I thought it was today, these flash-based advertisements, Google Chrome was going to stop them. I read it in the news last night, so I'm disappointed that did not happen. Now, back to where I left off. I'll go to a different website, so I won't spend my ad clicks over there. Let's see. Does this tell us anything about the movie? Following the epic biblical story of the resurrection as told through the eyes of a non-believer. Oh, that's interesting.
Yeah, I thought it was a very interesting premise.
Clavius, a powerful Roman military tribune, and his aide Lucius are tasked with solving the mystery of what happened to Jesus in the weeks following the crucifixion in order to disprove the rumors of a risen Messiah and prevent an uprising in Jerusalem. Wow, now that sounds good. When does this come out? Next year?
October sometime.
Of this year?
Of this year.
Oh, okay, because it says Risen 2016.
Yeah, it does. When I was at the movies the other day, I saw it did the trailer, and I'm pretty sure it said October this year.
All right.
But this movie's been in the works since 2013, so they've had a while to cook it and recut it and do it. So
any big name actors?
Yeah, there's some name actors in there.
Firth, I know that name. I don't know from where, but
you'd recognize some of the faces if you made that larger. You would recognize some of the faces there. There are some relatively well-known actors in it.
Okay. Well, I'll go see it either way. I'll go see it even if Kurt Cameron's in it. Poor guy. I love him, but he just
come on, give the guy a break.
I really admire him. I admire
know.
him and his dad
Sure.
and all the work and ministry that they've done. But in some of the movies that he's in, I mean, he as a kid he did real fine in that sitcom, which was a sitcom that your family could watch. It had a good moral message each week and all of that. I don't know that Kurt transferred to the big screen quite as well, but you know what? He's followed his passion, his heart,
That's
what
right.
he believes in, his faith, and for that, I admire and respect him ever so much.
Amen, amen. I agree with that. But anyways, I just wanted to, if people weren't aware, I wanted to offer those up as something they could, especially this weekend, they could go on a date night and go see.
And see War Room. Yeah.
And then keep an eye out for Risen. I don't know how biblical or whether or not it's going to be a Hollywood depiction, but I thought the premise and at least the trailer made you think that the premise was going to be powerful, meaning that you might see a conversion and see things from a different side of things, which I thought would be very interesting.
Yeah. Guys, in this hour, as we've been talking, 19 minutes in, I want you to look what happened in Crude. This is how volatile we are. Okay. The previous hour, now my candles start at top of the hour because this is a Globex chart. So this hourly candle closed at 45.97. This candle opened at 45.96, so a tick difference. But then what did it do? It ran all the way up to our alert. Remember, important prices, important areas, almost always tested. It came, dropped $1,700 per contract, okay, and then it ran right back up and it put in a swing high at 46.97. So it went 7 ticks above that. One tick is enough to reset the trade, and now it's dropped. I don't know how far it dropped, but even if it's just to where it's at right now, it's at 46.17. So from 90 to 17, call it 20 cents. I don't know. That's a 60-70 cent drop, run up and drop in the last 20 minutes. That's now $1 in crude from 46.90 to 45.90 which is, let me just show you how really volatile this is. Okay, so I'm going to put a little mark here at 45.90, which is right there. Okay, that is a $1,000 per contract move. $1 in crude translates into $1,000 per contract. Now in gold, a $1 move translates into $100 per contract. Okay, so this is big stuff. I don't know what else to say. Now,
volatility, you gotta love it, right?
Yeah, I think you
It's
wanted
it's what we live for.
It is. Volatility, well managed, is a trader's best friend, and
Absolutely.
if it's not well managed, it will be your demise. So the key is, you want volatility, but you also want to learn how to manage it, how to handle it, how to trade it.
Because when there's great volatility, that's when the two driving forces are most relevant, and it becomes, at least from a contextual picture, much easier to understand.
And this move came at 2 o'clock in the afternoon Eastern. Not traditionally a huge time for, some massive move in the market, but there it is. So now on your notes, you also wanted to talk about Dr. Carson, who my wife really admires. This guy. She realizes that maybe he doesn't have much of a chance. I don't know, maybe he does, maybe he doesn't, but she admires him very much, and as do I, everything I've read about him. And you also wanted to talk about the different types of traders: algo, market makers, and retail. So which topic would you like to pick up on first?
Let's just go to Dr. Carson, because
okay.
I just find it very interesting that at this point, as things have sensed and quieted down just a little bit, meaning the fervor of the last month and the debate that occurred, and the front runner starting to present more as a candidate, that in the state of Iowa, where it's a caucus, and it's different than a general type of election, where you sit down and you talk with people and you exchange ideas, and you win caucus voters basically one at a time, that Dr. Carson seems to be picking up great momentum. And I think that goes to an article I read the other day that basically says virtually in every election since the 20s, or maybe just a little bit past the 20s, for president, outside of the Richard Nixon election, that ultimately the candidate who is most likable or has the lowest negatives is the one who winds up winning the election. And so what that says is that Dr. Carson, his likability factor in the latest poll over there gave him 81%, which is absolutely unheard of. But I think that goes to the idea of the type of person he is, the character people see when they sit down and talk to him, and then the genuineness of his ideas or his thought processes, whether you agree or disagree. And I just encourage those people who haven't taken a look. I'm not saying that he should be president, but gosh, if we're going to be involved in the election and take our vote seriously, I think it's important to make sure that you take some time to actually understand and glean and learn a little bit about the candidates. I just encourage people to take a little bit of time and just learn a little bit about his story. I mean, his story and his life travail is nothing short of phenomenal.
I threw myself so hard and heavy into supporting Mike Huckabee 2 elections ago now that I've always been one to root for the underdog kind of thing, and and I really felt that Huckabee was the man for the job. He was qualified for the job, that he could bring dignity to the office of the President of the United States of America and all those things. And man, when he did not win, I gotta tell you, took the wind out of my sails. And this time around, I mean, he's certainly no less a man or no less a candidate than he was back then. I think I'm just a little older and perhaps a little wiser, and I realized that with my son came home the other day and said that on paper there's actually 800 people running for president. Is that true?
I have no idea. I know Kanye West announced that he's going to run for 2020.
Oh dear Lord.
Yeah, right after he was on the VMA stage. He was on the VMA stage and he just told people that he'd been doing a little bit of drugs, and yet he was running for president for 2020 and got a standing ovation.
Dear me.
Yeah.
Hey, I need to step away for like just
No
2
problem.
minutes. Can you talk more about Carson, or can you get into this talk about traders? And
Sure.
I'll just be right back.
Yeah,
Okay,
I'll just talk about traders because I'm going to have to go in a little while also.
Okay.
So
I'll make it
we'll
really
just get
quick.
into
2
that.
minutes.
Sure.
Okay.
Yeah, no worries. All right. So what I wanted to talk about briefly was the idea that in all you're getting, you should get understanding. I think Mr. Williams was talking about that, and so was Dwayne. And so I think it's, at least from my point of view, it's important to understand who's trading in the markets. When we go to work each day and we grab our lunch pail and we sit down and we go to do our work, that not only do we technically understand what we're doing, but we also have a contextual idea of what's going on in front of us. I think that we, and I include myself in that, who are basically scalpers or short-term traders, the biggest thing that can get in our way is we can get very myopic about things, and we can lose a contextual context, and that contextual context, I believe, is essentially important to being able to understand what your edge is and know the risk that you're taking so that you can embrace it. And as the Mark Douglas says, that the idea is that you embrace the risk, that you don't run from it, you don't fear it, you don't attempt to avoid it, that the risk is inherent in every transaction that you make, that you embrace it. It's almost like somebody comes to your door, knocks on the door, you open it up and said, would you like this? And you say, yeah, I'd like that. And he says, okay, it's going to cost you $75, $100, whatever it is that your risk is. Would you still like it? And if the answer is yes, then you take it. And that is, in essence, for me at least, how I would describe the risk. It doesn't mean that I wind up paying that every time, because if I have an advantage or something that gives me an advantage, I shouldn't. I should win more than I lose. That's inherent with having an advantage. But in that us as short-term or shorter-term traders, and even for those who are swing traders, you want to apply this even in a larger picture, that you need to have a contextual understanding of what's going on. And part of that contextual understanding is understanding that which drives the markets and also the different groups of people that are trading at the same time you are. And I break those three groups down, and I'm sure somebody wiser and more experienced would give a different explanation, but mine are that you have three. You have algorithmic traders. When I talk about algorithmic traders, I'm not talking about the ones who just use an algorithm to find entries in a swing. I'm talking about the front-running algo traders that are trading a high frequency. And then you have the market movers, and those are the folks that have the large counts. They're the ones that are moving them. Those are the guys who are trading for the hedge funds, for the mutual funds, front-running them and doing those things. And then we have the retail traders, which are us. And I just want to purport to you, I don't have the time or the capacity to get into anything, but I want to purport to you that there's a reason why, CFRN notwithstanding, that 90% or higher of the retail, that third group that I talked about, don't make it, that they don't have the capacity. Now, there are many reasons why they don't, but one of them, I think, is that they don't have a contextuality or contextual understanding of who they're participating with, what each of the other groups are doing, and how that impacts and affects their ability to trade in a way that will show a positive P&L. Are you back?
Okay.
I hear you whistling.
Yeah. No, I'm here and I'm listening, and I'm hoping that, I know you're short, for time, but can you delve a little deeper into I mean, what you just said.
Sure. I think that irrelevant of the idea that everything now is technology based, meaning back in the day everything was in the pits and people would stand there and you could see people's faces and you see that they were about to raise, or as Mark Douglas said, you could position yourself in a place where you could be the first to hand a ticket, meaning all those things were there and you could visually digest them and get the feel and the flow. That just because we're not all on a pit anymore, that all those things that are there and all those human drives that are there still exist within the market, but they exist differently for the three different type of market players. And unfortunately it's the most difficult group, or the most difficult group to be able to be profitable in, is the third, which are us, because the other two actually move and or are able to participate in the market differently than we are. And understanding them and what drives them, what their motivations are, and being able to contextually see that within the charts, because you can't stand next to the guy who starts tapping his foot really fast, fumbling with his things, scratching his ear, covering his mouth because he doesn't want to say anything yet. You can't see that like you would if you were standing in the pit, but you can see that within the charts, or the way that you view the charts, if you believe that there's a behavior based behind the actual movement of the market. Does that help at all? Or am I still being too out there?
Well, you know what? Let me poll the audience and
sure.
Let me see if there's any questions here. Okay.
Because next week I could go into it more if it was something that interested anybody, and if not, then we certainly could go and talk about something else that more people would find interesting.
Well, some time ago, I wrote an article that, because on this radio show there was, and now I'm going to go to an incognito window. For those of you that don't know, Google does not give you pure search results. Google, based upon your browsing history, okay? That doesn't matter which browser you use, whether you use Firefox or Chrome or Explorer, but if Google is your default search engine, okay, then they glean your habits, where you go, where you spend a lot of time. And so when you search for something, they're going to send you back results that reflect your browsing habits, where you've been, what you've looked at, where you've spent a lot of time. And so it's really it's a discouraging thing, because so often young budding entrepreneurs will contact me and they've launched a business and they're so excited and they say, oh my gosh, Dwayne, it's just a miracle. I launched a website and already today, for my main keywords, when I punch it into Google, I'm in the top 5 positions on Google for my keyword. It's the hand of God. It's like a stigmata. It's like, it's a vision. It's Jesus in a taco or something, and I'm like, whoa, calm down. And I hate raining on people's parade. I said, I don't know how to break this to you, but you're getting curated results. Google is showing you what they think you want to see. Bring out this little incognito guy, and then you'll see what the rest of the world sees to a degree. Actually, what you'll see is what you would see as if you brought a brand new computer out of the box. Because the other people, when they search on a specific term, their results are going to be colored and flavored by what Google thinks. Now, you can go in and change the settings in your search engine. However, most people are content with the way Google serves it up, because they, along with Google, somehow feel it's in their best interest. But don't you ever wonder why when you search on certain terms that you're interested in, you always get the same results? It's like the internet's never changing for this particular search term. So whip out incognito. The other one, Firefox, they have a different term for it. Secret window or something. I don't know. I said all that to say this. Number one, because I mean, I've seen guys just so excited and just start spending tons of money because they've captured page 1 of Google for a particular search term on their computer, but the World Wide Web doesn't know they exist. You can't even find them. So I don't know if I still have the number 1 spot for this or not, but define professional trader. There it is, definition of a professional trader, still holding at the number 1 position since 2012. So I encourage, based on what Jonathan has just said and what he'll talk about when he comes back next week, is I had a very heated conversation with someone, I'll leave names out, on this radio program because that person was using the term professional trader a lot, and I think making members of the audience feel a little less than whole. And that bothered me. And so I sat down and penned this, and there are, yes, the infamous list of 10 top 10 signs you may be a professional trader. I'm just going to leave, I don't want to do a spoiler alert thing here, but let me just say that the size of your account has nothing to do with it. Okay? A professional trader.
I'm going to let you. I'm going to let you finish this up. I'm going to head on out, and I'll talk to you next week. All right.
All right. I love you, man.
My friend.
All right.
I love
Take
you
care.
too. Take care. Bye bye.
Go read that, because maybe you don't know who you are. Are you a professional trader? Just because you have a big fat account, because you got a whole lot of money, that does not make you a professional trader. And because right now your account size will only allow you to trade, a couple of contracts in the S&P 500, because the margins are 500 per contract, you could be much more of a professional trader than a lot of the guys, walking up and down Wall Street in the gray suits. Just read the article. The Google to bring it up is define professional trader. It's 4 years, it's sat at the top of the results, so go figure. I don't know. The internet's ever changing. But I think what I just taught you about getting pure search results, because you might be thinking, man, this one guy, he always gets the top position in the search results for this phrase. Well, that's because every time you search that term, you click on his site. And so that's just one more point for him. And so you're just cementing the fact that he's always going to be number 1 on your screen. So if you want to see a different internet, an internet maybe you've never seen before, try that. Incognito window. Okay? Takes away all that curated information about you and just gives you the straight skinny. Okay, let me see what I got in the chat box. Already done. Bert, thank you so much. Man, you guys move so fast. Huge. Really, really huge. Let's see if there's anything else here I need to answer that I haven't covered. Oh, I don't think we looked at the Russell. Oh, look what happened over here. The low was 1913 and a quarter. So we came down in the last hour to 1914, and then in this hour we made it all the way down to 1913 and a quarter. Okay. Now, what was our number? 13. Consider being short below 1913. That didn't happen. Now, what if I had flipped it around on you and just handed it out the other way? Because remember, the rule of the trade is simply this. If price gets within 2 points of a weekly trading zone, it is a high probability trade that it's going to actually touch the zone. Well, I didn't give you the other side. I mean, I could have. It was staring at me, but I'm not going to try to pretend I did when I didn't, because it's all on tape, right? We record everything. I know we don't use tape anymore. How high did it go? The swing high was 26.50. Okay, but did it get there in such a manner that it would have actually allowed you to take 2 points out of the trade? Well, that's a great question. Let's go find out. Let's take this, and we'll take this, and we'll knock this down to, oh, I don't know, let's use a 1 minute chart just for fun. And let's make it the ES, not the SE. Alright, so there we go. This is a 1 minute chart of the S&P 500 E-mini Futures. Now, the weekly trading zone overhead from last week, not this week, was 26.27. 26.27. Okay, got to remember that. So let me drop in a 27, and let me drop in a 26, which would be right here. Okay, now if we were going to use that same thought process, which would say consider being the same thing that we used, consider being short below 1913. So here it would be consider being long above 1924. Okay, and so that would be 1924 and a quarter. So look what happened right there. It tripped over the line at 154. Okay, let's change the color of that. See, I'm just as happy to show it to you when it didn't happen as when it does happen, because that's the truth about trading. So many of you suffer today because no one ever bothered to just tell you the truth about trading. Sorry to say. So the official trade we put out to be short 1913 to 1911, that one never triggered. The trade we didn't put out, right? The trade we did not put out, that one actually tripped over the line, and it went to 24 and a quarter, swing high, and then it pulled all the way back down to 13 and a quarter. You see how it ran the whole spectrum, zone to zone, right? Doesn't change the fact that if you had bought 24 and a quarter on a stop, you would have been stopped out. Over here, it just ran. Now let's do something. Let's go 4-tick range, so that all the candles are the same size, and many of us are accustomed to looking at the market this way. Okay. Plus, if I'd have just done the 4-tick range, I could have made it look like it just really happened, and that there wasn't this wart over here, or that one. Really? I just love telling you guys the truth, because so few people do. I get a real joy out of that. I do. It's meaningful to me. All right. So now, what might have been different? Let's see if we can figure out anything that might have been different between this one and this one. Now, is it is part of it possible? Let's see. No, I don't think that's part of it. Okay, so let's pick this apart for just a moment, live in real time. Okay. Let's throw up our CFRN indicator. Okay. What do we have? We got a bullish cross, price pulls away, price pulls back, up close, you know the routine. Price pulls back to physically touch, up close, by the open of the next candle. And so, all things were looking pretty good there. Now, how about that previous one? Did we have a similar scenario? To a lesser degree, we did. Okay, we did have a blue CFMA1 climbing. We didn't have perhaps a true trade setup in the truest sense of the word, but I mean, the blue was above the green. Was it not? It was. Okay. Let's see if volume played any role in any of this. We talked a little bit about this yesterday, how they always say, you know, that, what is it, volume precedes price. Okay. And so the candle that preceded, see, this is the candle that preceded. It's way down here. The candle where it actually pierced was up here. So the candle that preceded here had 557 contracts. The candle that preceded here actually had 679 contracts. That may not be the answer. At least not in this case. Oh, and let's not forget that there's, you know, nothing happens 100% of the time in the markets. Why? Because that's just the nature of the markets. Now, was this a beautiful long trade? Yes. And another one? Yes. And then once we had a bearish cross, did we have a beautiful short trade? Yes. We did. Okay. All that being said, let's throw up the slingshot and see what that looks like. Come on. There we go. So, here, when we pierced, what we have? We had a blue slingshot. Okay. Do we have the whole divergence thing going on? No, not really. We do have a blue slingshot, so let's slide back to the other one that didn't do the deal. And did we have a blue slingshot there? We did. They both had a blue slingshot. So, we have to ask ourselves now, from a larger perspective, from a greater context, if you will, okay? What would cause these to not reach this zone, and this one to so beautifully do so? I'm going to leave you with that question to ponder. I'm going to let you do some research. I'm going to let you do some thinking. If I might be so bold as to point you in the right direction, you might consider looking at just the CFMA1. Okay. Now, we already said it was blue over here. Okay. In what way is it different than this? Email your, if you're now, only partners will be able to do this because you have access to the tools to actually put this to work. If you are not a partner, then you can use your own tools, whatever those might be, to perhaps shed some light on why this was attracted. Now, we'll notice that while this got across the line by a tick, this got turned away, and this got within a tick, and this just, now see here we have a very different scenario because we were coming from above, and this fast turnaround here, I don't expect those, or I don't expect anything. Understand that the weekly trading zones were not created for the purpose of this trade. This trade came about through historical observance. Just like how the weekly trading zones almost always close below the highest zone and above the lowest zone. For 5.5 years, go through week after week after week after week. The amount of times it did not happen, you can count, I think, on one hand, but certainly on two hands, right? But again, we didn't set out to do that. We set out to create the weekly trading zones, which was a backdrop to our trading, and that was just something we noticed after the fact through historical observance, right? Now look what we have here. We have another approach unfolding live in real time. Now, where are all the players on the field? Okay, down here you got your cycle, blue. You see what just happened right there? Green line turned down, hasn't crossed the 50-yard line yet. The cycle is blue and climbing. Okay, price ran right up to it says it actually printed 24.25. Oh, I guess we can't see it because of the CFMA1. So it already did. It already printed 24.25, and now it has pulled back to a swing low of 22.5. So 24.25 to 22.25. You see what happened here? Price ran up. Now it's pulled back into the BBC. Okay. Now look where the CFMA1 is positioned. Look at it here. Look at it here. All right. I will leave this chart up and running so you'll be able to see what happens with this particular trade. This trade looks a little bit like this trade, but it's quickly starting to look more like this trade because we've got a bearish cross on our hands. So again, this candle that we can't see the tip because of the CFMA1 did register 24.25. Okay. Now, as you recall, I didn't put that out at the beginning. Okay. Now, I want you to look left and see if the hourly chart gives you any kind of an indication as to why I might have been less than interested in that trade. Let me just share with you the real answer to this is more readily visible on the hourly chart than it is on the 1 minute or the 4-tick range. And so I'm not going to switch it up and put this trade back on at this point. It's already a failed trade. I will leave this one to stand. Okay. This one here we can talk about some more tomorrow. We'll see what happens with price between now and the overnight session. I think the only I think the only market that we didn't have a chance to do the Concierge Trade Alert recap on was the Russell. Oh, the Russell and the Euro. So let's do those real quick before I go. And let me take care of this. Just give me 1 second, please. Okay. One more minute. That's all it takes. Forward. Check. Okay. All right. Gary says, this is off topic, with Chrome as my browser and Windows 7 Professional, I get more advertisements than I was getting with my last operating system. My question, how do I get rid of all the ads every time I click on something? Well, Gary, if you're clicking on a Google ad, it uses a technique called remarketing, which means it places a cookie on your hard drive. And so, in fact, I can show you an example of what remarketing looks like. If I go here and I go here and I type in, oh, let's see, oh, I can't read my cookie there, so I can't do that. So let me use this one. Let me go to Reuters. Okay. And then let me click on markets. And let's see if the ad pops up. Looks like it's not going to pop up this time. Have you perhaps noticed that certain ads seem to follow you around? Especially things that you perhaps were almost going to buy and you got really close to clicking the, maybe you even got to the shopping cart stage and you backed away, and now that ad, it's called remarketing. I'm trying to get, we actually use remarketing. It's a marketing tool, but they usually show up on Reuters. Ours do quite often. I'm surprised nothing's showing up today. Oh, there it goes right there. 5-day free trial. Still shopping for a way to trade Emini Futures? Stop. Please don't click this, because it costs me money every time you click it. Alright? But that's remarketing, and that's how Google works. Now, is there a setting in Chrome where you can go in and turn off all advertisements? Gary, I think there is. I read an article the other day. I read an article that said Chrome was going to officially shut down. Maybe it's tomorrow. Maybe Wednesday is when these kind of ads won't work anymore, because that's a flash-based ad. And so that's going to solve part of your problem. But if I'm not mistaken, there's a setting in here somewhere, and if somebody in the chat box actually knows where it is, let's see, get themes, Google manage search engines, enable guest browsing. Let's see. Google it. That's the best way to get the answer. Google, how do I turn off advertisements in Chrome? I'm pretty sure there's a way to do it. And please don't click the ad. Alright, I made it pop for you. That's how it works. But, and I'm kind of, a little heartbroken myself. Although, see, mine's not intrusive. Mine doesn't start playing a video and talking over you. And like if you're at your desk working and you're trying to research something, and all of a sudden your computer just starts, blaring the national anthem or whatever, all your coworkers and of course your boss walks up right at that moment. Oh, surfing the net on the clock? No, boss, I was doing research. Yeah, she looks like research. You know what I'm saying? So let's go back to something that won't get me in trouble. How about this? The Russell. Last night on the Russell, we said to consider being short below 1138. Okay? And so, what sort of expertise does that take? Well, you got to be able to put on an order that says sell short 1130 790. Is that what I said the alert was? The alert was to be short 38. Okay, if I can get a straight line at 38, I'll be doing good. 38. 38. There's 38. Okay, swing low was 32.1. Call it 32. So that's 6 points, or 5. It's 59 ticks. From 1138 to 1132, that would be 60, but because it's 32.1, it would be 59 ticks. So that's a $590 per contract move. One contract. What did you have to do to take advantage of that? You had to be short at this price. Important prices, important areas are almost always tested. So it comes back and it gives you another opportunity to be short at this price for even more points. And then it comes back and gives you another opportunity and another opportunity and then another opportunity. The swing low here was 36.60. How many ticks do you need? 10. This move here gave you 14. Okay? So done, 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 redone, redone again, and then done even a little bit more. Okay? And even this little guy right here brought home the bacon. Okay? All right. So the S&P the S&P offered multiple opportunities to be profitable. So did bonds. So did crude. So did soybeans. So did the Dow. Oh, gold's the one we haven't looked at. The Russell did. Oh, we haven't looked at the euro. Okay, so real quick, let's look at gold. See what we got going on over there. Gold and 2200 hours. Is when the alert went out. Okay. And the alert said, consider being long gold above 1144. So put a horizontal line at 1144. That's 43. Let's scoot up to 44. 44. 44. 44. 44. Ah, see, that one got you in trouble right there. The trigger was 44 or 44.1, and this went all the way to 44.3. So it two-ticked you in the wrong direction. Then it came back and put in a swing high at 1147.30. So from 1144 to 47.30, that's 33 ticks or $330 per contract. The short side of gold, 1137. That one also was not one you want to take home to mom, because it didn't cut the mustard, as they say. Swing low here was 36.50. So it did put 5 ticks on the table if you're using aggressive risk management. If you're moving your stop to break even at 4 ticks, then you got to stop the break even. Okay? Here you just got stone cold stopped out. Here you at least had a shot at break even. Okay? One more, the euro. 2,200 hours. Right there. Okay. So on the euro, long above 11,320. 11,320. How many ticks do we need? 8. Why? Because it pays $12.50 per tick. So if we go up to 11,320, that's right there, 11,320. Swing high was 11,335. Okay, so from 20 to 35, that's 15 ticks, and you need 8 if you're just looking for your daily goal. $12.50 per tick times 8 ticks. Got almost double. One more tick and it would have been double your daily goal. On the short side, short below 111.50. That's way down here. 111, no. 111.50. So no trigger on the short side. So that covers all the markets for the day. Oh, and this one came back down here and finally dinged us on the short side. Let's see. Let's look at it on the big picture. There we go. The one we waited for the whole show. All right. It just, remember we were looking for 1913 to 1911. All right. And what we end up with? We had a swing low of 1912.75. It went one tick over the line. 1912.75. The best laid plans of mice and men. That's our first radio show trade that didn't pan out, I think. I think we had one last week that didn't pan out. So there's no holy grail, guys. I mean, this is a simple little trade here that, as you can see, works out more times than it doesn't. But it doesn't always work out. So, however you can put it to use, you have other tools. Let's take a look. Just one last thing, then I really am going to go. Let's jump back over to the ES 4 tick. All right. Now let's take a look at where it came down. Okay, we were looking for it to hit 1913. That's what we were looking for. And I could try to make myself feel better by saying, well, they are last week's zones. Well, they are, but that's I'm not going to take that. I'm not going to take that route. Okay. So if we're looking to go, and we needed to go actually 1912.75 in order to be short one tick below, right? And it went to 1912.75. So let's open this up a little bit so we can better see it. So this was a pretty decisive move that, made it appear that the market wanted to trade lower, right? Bearish cross, price pulls back, down close. I don't like this, right? You got this thing is hooked and curling up. I'd much rather have it pointing down, right? personal preference on my part, I guess. Right? And see the flow down here. Okay. Now what are we doing? We're bebopping off of this number. So whether it provided us with a picture perfect trade or not, is it still in fact an important number? Did it have carryover effect? Well, I think that's evidenced by the fact that we've seen price just work its way back and forth between these two areas. And if we go back further, we'd have to go back further a minute. Well, there we go, back into, what day was that? Oh, that was the day 2. Okay, just work in that area. Bullish cross, pull away, pull back, up close. There she goes. Alright, so I've given you more than enough to ponder and think about tonight. Well, that's a real shame that trade didn't work out for us. So, but that's just another trade, and that's the truth about trading, right? The best trader on the best day is going to be profitable 7 out of 10 times. Say that again. Not the new guy, not the one just getting started, not the guy that just funded his account, not the one that just got his indicators installed and uploaded or whatever, but the best trader on the best day, profitable 7 out of 10 times. If you can wrap your brain around that, you can become that trader. You can. Mark Douglas on the show last week said it so clearly: analysis is such a small part of the equation. In the video yesterday with Dan, he said it so brilliantly. He goes, it's all about the emotions. You gotta watch that. If you haven't watched that video, you gotta go watch the video. Dan Springer going live, CFRN partner. That is a video that will make the rounds of the internet. I don't know that it's going to go viral, but it's that good. It's got viral quality. So subscribe, share it, make it go viral, because it's going to help you. When you watch it and listen to it, you're going to go, dang. Now, I'm hearing that not from the head guy or the big cheese or the boss or the guy running the show. I'm hearing this from somebody who came along and said, I have a day job, I earn a good living, but I would rather trade, and I want to trade for a living. And he's put in the time, he's put in the energy, he's put in the effort, he's been dedicated, he's been loyal. He has risen early every day to do his trading before he goes to his day job, which involves a lot of travel. So that means a lot of mornings waking up in hotel rooms, getting hooked up to their Wi-Fi to do the trades before heading into the sales meetings and all the other things. You're going to get a real good glimpse in his life. It's a shame that I wasn't able to capture the first 20 minutes. It didn't dawn on me how good this conversation was and how valuable it would be to future traders until we were 20 minutes in. But I think 50 minutes to an hour that you get is so worth it. So absolutely worth it. And with that, I'm going to bid you all adieu. I'm going to get up and back up and move on. Yeah, Gary, just go Google it. Yeah, how to... the fact that you're using Chrome, the number of ads that you're seeing, I don't think... the fact that you're using Chrome doesn't increase the number of ads you see. It's just that... the internet, yeah, we pay for it each month, but when you think about all the technology that's out there and all the sites and all the work, I mean, it's got to get paid for somehow, and you're going to get bombarded with advertising no matter which way you go, unless you find that switch. Oh, and by the way, when you Google it and find the switch, Google it and find the switch, tell us where it is, because there may be some other folks in here that might want to turn off their ads too. To Wayne, some of the Russell moves you're showing are amazing, i.e. large size, but if a trader is using the 8 tick and done rule, how can they participate in these whales? Well, you just drop down to a 4 tick range chart, or you can leave it on the hourly chart if you want, Gerald, and you just simply get triggered in when it crosses the line, and you use an 8 tick hard stop. If you want to participate in like those $1,000 moves, by whale I'm referring to the $1,000 moves we're seeing in some of the other charts today. If you want to participate in those, you're going to have to be willing to risk more than 8 ticks. I mean, every now and then you can I don't like the word luck. You can, by using your larger time frame and your smaller time frame, you can get into a trade that ultimately will run far beyond the 8 or 10 tick target. But typically, if you want to take our 4 tick range chart that we use every day in the live trading room, this guy right here, if I get rid of all the drawing lines, I can scale it out to an hour. No rule changes. Everything remains the same. Okay? There will be areas where, like, right here, bearish cross, pull away, pull back, down, close, sell the open of the next candle. And if you just stayed with it and stayed with it and stayed with it, would it have paid you that quote-unquote big money? Yeah. This is on an hourly chart. Again, price pulls back to physically touch, down, close, sell the open of the next candle. And the open of the next candle was 1918. That's where the candle opened. And it dropped all the way to 86 and a quarter. Alright? Now, the open of the candle was 1918. The high of the candle was 1975. Okay, now this is on the S&P. So, what was the drawdown? If it opened at 18 and the high was 1975, that was a 7-tick drawdown. A 7-tick drawdown in this isolated instance, okay, allowed you to participate in a 1-hour drop from, I'm going to call it, 1918 down to 83.75. So, goodness gracious, that's what, 17 and 18. Is that 35 points? Is that right? But how rare is that? See, you just have to be willing to allocate additional risk if you want to go for the bigger moves. I mean, will you occasionally stumble into one like that? Sure. Okay. And it doesn't have to be hourly. I mean, you can do the same thing on a daily. Okay. Everything remains the same. All the rules, everything. Bullish cross, price pulls away, price pulls back, up close, by the open of that candle. The open's 82 and a quarter. And the swing high that day was 97.50. From 82 and a quarter to 97.50 in one session. And then it closed back on the low of the day. And then a physical touch and an up close, and away it goes again. Okay? So, what you're looking for, I mean, everyone would love to have that. I would love to get the big picture gains with a minimal amount of risk. But that's, unfortunately, I mean, here's what you can do is you can use the bigger picture backdrop, such as an hourly. You can enter on the 4-tick range chart where your risk is only 8 ticks. Now, here's what may happen. You could have 2 or 3 false starts where, you get in, you get stopped out. Okay, but then the setup presents itself again. So you get back in, you get stopped out. 8 ticks. Then you finally get triggered in and it runs. How far does it run? I don't know. So then you go back later and you go, okay, I had to get stopped out 3 times to get into this move. That's 24 ticks that I got stopped out. I'm glad it ran 80 ticks because it made the trade worthwhile. Would I have been better served? Oh, see, instead of 8 ticks, if I had been using a 16 tick stop, I would have never got stopped out at all. Those are the kinds of things you have to think about. And if you bring those questions to the Partners Workshop on Thursday night, we can dig into those and we can look at some charts and we can take a look at some real life examples of helping and help you in the workshop and via private mentoring sessions how to figure that out and how to make it work for you. Okay? Now, let me say this before you go down any of those rabbit trails chasing any of those things. You have to do what Dan did. And that is, and it doesn't matter who you are, I don't care how much money you got. All right? In fact, the more money you have, probably the more difficult it is for you. You have to put together 10 consecutive days in the simulator where you make $100 in 10 trades or less. Anybody can have a lucky day. You could even have 2 lucky days back to back. In some bizarro world, you might have a lucky week. But the odds of you having 10 consecutive back-to-back trading days of quote-unquote getting lucky, the odds are greater that you would get struck by lightning while hitting the lottery. That's how astronomical those odds are. And that's why that number 10 was very carefully thought out. Okay, a lot of time, a lot of thought, a lot of research. Nobody gets lucky 10 days in a row. When you get to that 10-day mark, you have developed a skill set. You understand discipline. You know how to wait for the trade. You know how to think in probabilities. The only thing that's left when you go live is the third leg of the trading stool, and that's the psychology. How am I going to bear up under the emotional strain that will come into play the second there's real money on the line? Can I do it? How do you find out? Well, first you make sure you have the skill set. That's your 10 days. First, you make sure you understand the mechanics as well as the methodology. That's your 10 days. And then when your Wednesday arrives, as Dan's Wednesday arrives tomorrow, what admiration and respect I have for this guy, that he's allowed his life to be put under this incredible microscope with all the world watching. Talk about pressure. Listen to the confidence in his voice in that video. It's not cocky. It's not arrogant. He understands that he has gained a skill set. He has learned to wait for the trade. He knows how now to think in probabilities. Every Achilles heel that showed up during his journey, he's addressed it and put it to sleep forever. I'm so proud of him, I can't even begin to tell you. But it's a journey that he and I have been on together. We've spent a number of hours in private mentoring sessions. And if you're on the trial and you want to take that journey and you want to end up where Dan is, then go take the trial. And if the website turns you away because you already took it, if you haven't taken it too many times, email me, support@cfrn.net. I have the keys to the store. I can let you in. All right? All right. Dwayne, hypothetically, if I start the 5-day trial next week, what is the absolute minimum before I can go live? That's the wrong question, Joe. I'm sorry. And if I'm not mistaken, you already took the trial just recently. Did you not? It's one trial every 6 months. Unless there's some crazy extenuating circumstances. See, you're saying, how fast can I make some money? That's the wrong question. The right question is, how can I learn how to trade without losing all of my money? That's the question to ask. If you want to become a trader so that you can make the mortgage payment next month, you better get yourself down to Walmart and fill out one of those greeter applications as fast as your legs will carry you. I'm speaking to everybody, not any one person. It doesn't work that way, okay? It just doesn't. This is not paint by numbers. This is an individual journey that each person takes. Man against market. Okay? There is no simple solution. Trading's not easy, but it can be simple. How quickly you'll go from the trial to going live depends upon your ability to follow the rules, use aggressive risk management, think in probabilities, be resilient, don't give up, keep pressing forward till you've got it all together. See, okay, I won't even use any names here, but somebody's saying, well, now it's hard for me to even do the thing because I spent my money chasing some other things. Okay, gosh, guys, there's so much shiny stuff out there. I don't know how many years of your life it will take, or how many tens of thousands of dollars it will take to realize that the shiny stuff, it's not real. Okay, I mean, we all wish it was. I spent years wishing it was. I spent the stories on the website. I spent my years looking for magic. Okay, there's no magic. It just isn't. Every day, the market opens, and there's an endless flow of opportunity. There's buyers, and there's sellers. And if you don't have time to learn, then you can't learn. Period. See, Dan has a day job. Dan made time to learn. Dan worked nights on it. Dan worked weekends on it. Dan got up early every day and traded pre-market before he went to his day job. See, he made time. He had to because he wants it so desperately. This is what he wants. He's figured out what he wants his life to look at. He has a very nice job with a very big corporation. But he knows what he really wants. And it's taken him time to get here. But the fact that he's here, he stands on solid ground. He doesn't have to worry about tomorrow if he's going to get lucky and get his points. Because he knows now that luck has nothing to do with it. It has to do with learning a skill set and applying it methodically, day after day after day. That's how you learn to trade. Everything else is a gimmick. You know, I mean, as long as you have room on your credit card, there's another wizard, another guru, another crystal ball, another magical indicator, or mystical oscillator, or secret time frame that promises to unleash the mysteries of the trading universe into your lap. Trade 10 minutes a day, 2 hours a week, and just watch the checks show up in the mailbox. It just doesn't work, guys. If it were that simple, Michael and I wouldn't have to work so hard to help so many people learn how to trade. We would just hand you the magic formula. You would slip us, we would probably triple our price if there really was some magic formula, right? You would slip us a check and we would slip you the magical formula, and then we'd wave bye-bye. You wouldn't need us anymore. Let me leave it at that. Any one of you tuned in today, if I can help you, I will. It's what Michael and I have dedicated our life to. It's what we do. I see that red candle has now gone down and tagged 1910 and change. Did it do it on the first trip down? Nope. Did it do it on the second trip down? Or the third? I don't know. It finally got there, right? Okay. But was there a stop out on the way? Yeah. See, that's the truth about trading. I really had very little doubt that if it breached 1913, that it would go to 1911. The hitch in the giddy up was that it had to pull back before it actually completed the move. That's the truth about trading. David, thank you for your comment. I'll share it with the audience. That's what I like about you guys. You're accessible and willing to help us reach our goals. We really are. Do you have a new weekly zone in this area? Great question, Alan. No, I don't. In fact, let me say this. The next weekly trading zone below us, we only have one zone below us. It's about 60 points away. 60. The man said 60. 60. 60. Yeah, true story. I know. Hard to imagine. On an ordinary week in normal times, from the highest weekly trading zone to the lowest weekly trading zone is about 100 points on average. And it varies from maybe 60 to 120. But the average, being around 100. Okay? From the highest zone to the lowest zone. But from where we are now, at the next to the lowest zone, or actually we're already below the lowest weekly zone. Actually, I need to rethink what I just said. No, that's true. It's about 60 points. So, if you have something that puts you short this market, and maybe that might have something to do with why I was pretty confident that once we broke 1913, we'd hit 1911, because I'm aware of how much potential downside there is. The way the market is setting up here, we're rushing. What do we got left into the close? 25 minutes. And then Asia, then London. This thing could look very ugly by the time we all meet up here again tomorrow. I'm not predicting that because I don't predict. What I'll do tonight is I will give you Crude's down 8.5%. The Dow is down almost 3%, 471 points. S&P is down 3%, 58 points. Nasdaq's down 3%, 139 points. Gold is actually positive, up 0.6%. So tonight, no matter what happens between now and the time I put out the Concierge Trade Alerts. Oh, and in the video with Dan yesterday, you'll hear him talk about the trade alerts. He doesn't trade the alerts per se, but they are a backdrop to his trading. So, back to what I was saying. However I can help you, however Michael can help you, or Bert or Leslie, that is what we're here for. Okay? We have multiple income streams, and if you become a partner, bang, you're part of our multiple income streams. And as a partner, once you become consistently profitable, then you have the opportunity to give away free trials and recoup 100% of your tuition. True story. But you need to get consistently profitable. You need to be in Dan's shoes. You need to put together 10 days in a row where you make $100 in 10 trades or less. Carryover trades and carryover percentages count just like they do in the real world. Okay? All right. I got to go. I know, Alan. When I looked at that number this morning, I went and I double-checked it because I knew I was a little tired on Sunday when I was doing the calculations, and so I rechecked it, and yeah, that's the deal. Now, I'm not going to brag and scroll backwards and say that last week we nailed the lowest weekly trading zone to the tick. I won't do that. Oh, wait, I just did. Okay, well, so I can't say that we're going to go down and hit the lowest weekly zone this week. It is really far away. And I don't know that I've ever had a 60-point gap between zones before. That's the math. That's the mechanics of this market right now. That tweet I sent out about perhaps the invasion of the giant candles is over was obviously premature, because look at what's happening. I mean, we could easily break 1900 if this keeps up before the close of the day. Then that brings us down to about 50 points to the final lowest weekly trading zone. Okay? All right, I really got to go, guys. I love you all. I'll do whatever I can to help you. You know how to reach me. support@cfrn.net, or give us a call, 949-42 E-Mini. 949-42 E-Mini. All right? Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading Emini Futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.
Trading Metro, the definitive destination for all your trading needs. Forex, futures, options, and stocks. Visit tradingmetro.com.
Hello and welcome to the Mind of a Trader. This is Steve Croft. Do you remember those times in life when you've come to a fork in the road?